Yeah, but the trash bag is secret mess until this morning.
I'm in Oshi vacation.
Good morning, good morning, good morning. Is anybody there?
Good morning, I'm here.
Good morning.
Good morning.
Good morning.
Good morning.
Hello.
Sorry, I had my speaker off. Anybody there?
Yes, good morning.
Good
Yes,
morning. How's everybody today?
Good morning.
good, thank you.
Doing quite well. Hope you're fine also.
So far, so good. Trying to keep up with you youngsters. It's not easy work. How was that
Morning is
day?
rough.
How was the homework?
Oh,
Don't ask. That's a different story.
that's right. Oh
Uh,
boy, lots of work.
yes, I know, I know. If it's any consolation, I did it on purpose. I wanted you guys to get baptized with fire a little bit. I wanted you to actually,
That's with fire and
I
brimstone.
know things, but you will find out like anything else. Because of that, you'll be much better than before. I guarantee. I'm certain beyond any shadow of a doubt that because of that madness, you are already better accounting students. You already know more than you ever knew in accounting, and it'll be hard for you to forget some of that stuff very easily. That was the whole point. So I won't apologize as a result of that because I know that it will benefit you not only for your examination but well beyond. Okay? I am more than thrilled that it appears as if everybody, if not just about everybody, submitted their pieces. I was very happy to see that. Some did it a little earlier and some did it at the ninth hour, but that's okay because if Jesus can save the thief on the cross of the ninth hour, then what can I say? How's that?
That's what I say.
All right. So before we get started, let's just do the register, make sure my gang is here today. Um, Natasha, are you here?
Good morning, I'm here.
Good morning, good morning. All of a sudden, next week is our last week before your midterm exam. So all I can do is to encourage you to continue studying those concepts. Make sure you know what things mean. You know what accruals and deferrals mean. They're not hard. You just have to know what they mean for your definition questions, and then make sure you understand the general concepts about stuff. So that if I ask you what's the difference between an income statement and a balance sheet, you can respond or differentiate between the four financial statements, meaning how are they the different and all that stuff. You could respond to things like that. Okay, it's not as difficult entirely as you think if you just continue to review. I don't know how you guys prepare to study, but since we've already gone through the lectures and going through the key material, I encourage you. Of course, you have to do your first reading, but once you've done your first reading, then you go back and whatever you do that works for you, make notes, make short sentences, find ways to shorten the meaning of things so you can remember whatever works for you. That's the key. And the other key is to just start studying every day, a little bit every day, a couple of pages every day. That's the key. Rather than waiting for those last 2 days or something to just, man, that stinks. Okay? So a little word to the wise. All right, Owen, are you there?
Good morning, present.
Excellent, excellent. All right. Ashley,
Good morning.
good morning. Morning, Ashley. Akiria,
Kyria speaking.
excellent. Good morning. Samantha,
Here.
good morning, Samantha. Okay, Fabienne,
Here.
Good morning. Chanel.
Cheryl?
Not Cheryl yet. Shadell.
Oh, Shadell.
Mackenzie.
She's not here.
Okay, I guess she will join us.
Maybe she's a bit late.
Yes, indeed. Having that second cup of coffee. Okay, Cheryl.
Here.
Yes. Irvinette.
Here.
Excellent. Irvinette. Rochelle. Rochelle. Okay, Michelle.
Present. Good morning.
Michelle. Interestingly enough, there are two persons in this class that have names of persons who are very close to me. The first person in this class who has a name that's close to me is Samantha, my baby sister. And then another person has a name by the name of Michelle, my other sister. So I suspect that those names will not be hard to remember for one reason or another. Okay, Dion. Dion?
Was that Dion?
Yes, Dion Stubbs.
Present.
Yes. Indira.
Here.
Okay, Indira. How are things down at the Ministry of Education without calling any names?
Let's not get into that, please.
That's funny. I like your answer too. Like, let's not go there. That is definitely an answer. Okay. All right, Indira, we will not go there. For those of us who know, know. All right.
Right.
Mhm. And since I've been around for several decades, when the ministry was still the ministry, those of us who know definitely know. All right. Don't forget your midterm is in 2 weeks, everybody. Which day is that?
April
April
3rd.
3rd.
Yeah, April the 3rd. April 3rd, are you sure?
We could push it back a week if you want to.
At least that's what you said last week.
I don't recall that.
I have it recorded.
So is April 10th?
Well, next week is what date? Next week, Saturday.
The 28th or the 29th.
Which one?
We'll still be in March. I know that.
I mean, we don't have any calculus nearby.
March
These
28th.
dates always get mixed up.
That'll be March 28th.
The 27th.
Oh, 27.
Which one? 27 or 28?
27.
27. And then the following week of the exam will be April the
3rd.
April the 3rd. Okay, folks? So be ready. The good thing is you have 2 weekends, this one and next one.
That's not a lot of time.
Yes, it is.
So we'll cover what chapters 1 to 5.
Everything that we do up to next week, Saturday,
Okay.
which will include probably, more than likely, chapters 4, which we'll do today, and chapters 5, which we'll do next week. And if we have time, I might consider a few extra concepts. I'll see how that goes. Okay, but certainly we up chapters 1 through 5, and maybe a little bit of 6, depending on what happens. So if you're planning your study schedule, go ahead and make sure you cover those 5 chapters. That's the other thing, a study schedule. Maybe some of you need to prepare a study schedule and stick to it. If you have time constraints, which you may want to do every night, if you cannot study before bedtime, plan to get up 2 hours before you go to work or whatever and do some review. do some practicing, but the weekends, don't do anything except what you have to do. And then run back home and spend the whole day today studying and practicing. Then tomorrow, spend 1 hour in mass if you have to go to church, and then rush home, spend the whole day in studying and practicing like that. Because remember, this is only for a season. Once this part of the season is over, you'll be fine. So you have to maximize it. Okay? I know it's not easy, but that's the best way to go.
Yes, we gotta eat, sleep, and breathe this.
Yes, absolutely. That's the idea. If you really want to maximize your return, as it is with anything in life. Okay? Absolutely. You have to eat, sleep, and breathe it. That's the whole point. Like when you're dating somebody you like. When you're dating somebody you like eat, sleep, and breathe them. Like, as soon as you get up, you remember them. While you're eating, you remember them. Just before you fall asleep, you remember them like that. And at the end of the day, you will not regret it. Now, if you have a casual relationship with this information, remember what I told you, like any casual relationship in life, what's gonna happen doesn't work that well. Okay? All right. Okay, what else is on my agenda? I have more homework, but I won't have to talk about that right now. Somewhere before the end of class, I will assign more homework. Why? Because the more homework you get to practice, the better you will do in your examination. Guaranteed. Okay? And the reason why I say that is because I noticed in the homework that you submitted already, I was just kind of taking a casual look already. And some people are struggling with adjusting entries. If you're one of those people, you are not alone. Uh, there are always a few students who have a difficulty initially with adjusting entries, understanding the concept. But once you understand the concept, then it is quite easy to do. Okay, the whole idea behind adjusting entries is basically to determine what has expired and become an expense. Once you determine how much is the expense, then you make your journal entry, you debit an expense and you credit the asset account or the relevant account, and then you post it to the ledger. That's it. And that happens over and over every time. Okay, so if you had a little struggle with it, don't panic. Grab 1 or 2 examples from your text today after class. Take an hour while it's fresh in your mind and do a couple of them just for the hell of it. Okay, just before you make your mall run or whatever, and then you come back. By the way, make your mall runs if you have to go. Very short, about 15 minutes, and then go back and pick up your text. Yeah, eat, sleep, and breathe. All right. So somewhere just before the end of class, I'll give you some more homework for practice. Like I said, you will not regret it at the end of the day, for sure. By the way, some people are still putting liability accounts in an income statement. Please don't do that. Okay, that's the whole. It's okay that you did because that's part of the learning process. I'm just saying, please don't do it just so you can remember not to do it. Okay, remember what items go into the income statement class? Anyone?
Revenue and expense?
Yeah, revenues and expenses only, nothing else. Okay, folks? Just in case you're still confused a little. Nothing else except revenues and expenses. Okay? It's very important. The other thing is what goes into balance sheets only? What 3 main items, what 3 main things go into the balance sheet? Anyone?
Assets, liability, and capital.
Yes, assets, liabilities, and capital. And see, once you understand these fundamentals, it's like the ABC of this thing. Once you understand that, then if you're doing an income statement and you see an asset, liability, capital, you can't put that in the income statement because you already know Only two things go into an income statement as revenues and expenses. And when we subtract one from the other, you either end up with net profit or net loss. It's as simple as that. Doesn't matter how many transactions I give you. I could give you 1,000,000. The only things that go into income statement are revenues. I don't care what kind of revenues they are. Expenses. I don't care what kind of expenses they are. And that's it. All right. Same thing with the balance sheet. The only thing that goes into the balance sheet are assets, liabilities, and equity. That's it. And if you keep it that simple, any question I give you and say prepare financial statement, man, you just look for what goes where. Put it there, and that's it. Piece of cake. I know, easy for me to say at this stage, but it's true. After you've done it a few more times, and I'll help you to do it because a piece of the assignment I'm giving today includes doing another set of statements just to give those of you who might still be wavering on that. And remember, the homework is the time for you to practice this stuff and to use your textbook. Don't try to remember stuff out of your head all and immediately. When you have homework, go back to your text and say, this question is asking for an income statement. Go to an income statement and see what's in it. Then let your homework be guided accordingly. Same thing for any other statements or anything else. That's the whole idea. For you to go back to the text, find that information, and make sure you're following it correctly. So that when the time comes for you to study and reproduce it, you'll be good to go. If you don't do it like that, you might find yourself struggling a little bit more than you should. Okay, students? All right. Any questions before we go on about anything? Okay, great.
Do you recommend looking for other resources to clarify and define when you're doing your, using, what you call it, YouTube or whatever? Because is that further confusing me, or should I just stick to the text?
Unless the text is presenting information that is really out in left field, and I don't think you'll find that in too many cases. All right. For example, when the text is describing a particular concept, okay, like what is owner's statement of owner's equity, usually it will give you a pretty clear definition. Unless the definition in your text or the information in your text leaves you baffled for some reason, and I don't think you will find that too often, perhaps at this stage of the game, you should stick with your text. Now, if you come across a particular set of information or concept or paragraph that still leaves you puzzled after you've read it in your text, then yes, if you want to Google it or YouTube it, a particular concept, because remember, once you YouTube it, then they always have a whole lot more to say, which might make it even more complicated for you. All right. So you might, if you want to extend it beyond your text for a particular area or topic or definition or paragraph, whatever the case might be, maybe Google it and see what Google says. Maybe Google might say something in a different way that might be more helpful to you. But most of the times, Owen, you'll find your textbook is sufficient. And of course, if all that looks weird and you're still a little weird on a particular topic or issue, then of course I am a resource. All right. Send me an email or something and say, I've looked at this concept and I'm still not clear. And I shall provide you or attempt to provide you with an explanation in the simplest possible form in an attempt to make it clear for you. How's that?
That sounds good.
Okay, absolutely. Any other questions before we move on?
Yes, Mr.
Yes.
Wilkins, can you go over the adjustment entries for the homework so I could see if I clearly or understood just a little bit?
Okay. Here's what to do. Who raised that question?
Samantha.
Samantha. Uh, Somewhere around 11:30, Samantha, if I'm still yapping, interrupt me and say about the adjusting entries.
Okay.
Okay, so I can take a few moments and have that discussion with you guys so that Those of you, and I'm glad you brought it up, those of you who might still not be clear, maybe after a little chit chat, it'll be clearer for you, more than likely. Okay? If it's any consolation, adjusting entries are always challenging initially for some students. It's okay. All right. When I first saw adjusting entries, I took a while to adjust as well. I'm like, what the hell? And I was a working student back then. So I get it. I was a working student throughout university almost. So I get it. 110%. All right. I tell my children I envy them. They could go to university full time at my expense and not have to worry about how to find school fees and food and lodgings and all that kind of stuff and go to work. And they're like, oh, Dad, yeah, that really happened to you? I'm like, you're damn right it did. Doggone it. Okay, my babies. All right. Can you guys see the screen in front of you? My screen?
Wait, I have a question.
Question, yes.
I just wanted to confirm the income statement is the same thing as the P&L, right? It's just another name.
Yes.
Okay.
Good question. Because people still get stuck on that even in the practice world, even the real world today, depending on who it is and where it is. I'm glad you raised that. They are the same. The income statement is an American term for the statement, okay? Just in case you're interested in a little history. The P&L or profit and loss is typically the British expression, but it doesn't mean that they cannot be used interchangeably between countries. Do you follow? So those of you, well, not you, but those of us like myself who studied both American and British accounting, which are essentially the same, with some exceptions in terminology and expressions, the P&L or profit and loss is considered a British expression for the statement, and the income statement is considered an American expression. Okay. In case you didn't know, the original Americans, other than the native Indians, were British, and therefore they came over to the United States seeking religious freedom, and so therefore they brought their British culture with them initially, until America decided that they're going to break ties with England and do their own thing. But they still have some of the old motherland in them, right? Just as we still do as a common law. Okay, kind of little history there. So when they came over and did accounting back then in the 16, 17, 1800s, they used profit and loss for a while. And then somebody came up and said, oh, that's bloody British. We need our own name. And then they came up with income statement. I know that's a lot for a simple question, but yes, they're the same. All right. Any other
One
questions?
more thing. Yes, Mr. Wilkinson.
Yes.
When you assess the homework, would there be any notes or notations once it's presented back to us? So we can, if there's anything that we can look at that needs to be, that we're falling down on?
Well, here's what I'm going to do. I'm going to review everybody's paper and see what track you're on. I'm not going to return the papers to you. I'm just going to return my responses to you. All right. So if you whatever areas you made errors, you will get credit for the paper. Everybody who submitted their paper will get credit for submitting their paper. Papers. My concern was that you get to do this work, and then I will assess it, and I will make my own and say, these are the strong points and these are the weak points. And when we come next week, I will let you know.
Okay, thank you.
Okay? So that you will know where you went wrong and you can go back and do a little more work in that area. Okay? I have already taken a glance at some of the papers in passing, and for the most part, they appear to be pretty well done. All right, I haven't gotten into the full detail yet, but from what I can see in terms of the incomes, the financial statements, some of the adjusting entries are done pretty well. Some went the other way. That's okay. That's expected, and because who the hell gets 100% everything the first time? It doesn't work that way. Sometimes, but not much. All right. But what I saw so far seemed to have been pretty conscientiously done. You guys took the time to write up your information. You took the time to show your journal entries, to post them to your ledger accounts. That's really what I wanted to see. Yes, I want correct information as well, but I was also interested in process and procedure and the ability to sit down and even mess with that rather than say to hell with it. I'm not doing it. I'm not submitting a damn thing. Something like that. So for those of you who have submitted your papers at all, you are way ahead of the game in my book. That was my first concern. And for those of you who conscientiously did that work, you're way ahead of the game. Okay? So I should be making my notations about any weak areas that I see and let you know so you can brush upon them. Okay? And I'll be making specific references in some cases so you'll know who you are. All right, any other questions? Okay. Can you guys see my screen?
Yes.
Okay. You see that blue box on the left-hand side that says making a statement?
Yes.
Yes.
Okay. That blue box is showing the relationship between financial statement. I think that was a homework question, wasn't it? Like, what is the relationship between these statements?
Yes.
Yes. Of course, everybody came up with something slightly different, some the same, but that's okay. That's expected. But if you look at this diagram, how many statements do you see in this diagram?
4.
Now, the first one is and notice the components of these statements. They're here in a very simplified manner. And if you learn them in that fashion, any questions that I give you and ask you to prepare financials, all you need to do is decide what transaction goes into what statement. And if you understand the elements of each statement, it is not difficult at all. You might run into some problems analyzing a couple statements, but that's okay. Professionals run into problems even today analyzing certain statements and certain transactions. That's not the problem. The key at this point is to make sure you understand what items go into what statements and be sure about that. And then go ahead and start plugging in transactions where appropriate. Okay, that's the key. All right. So the income statement then is showing net income. What is the relationship of net income to statement of owner's equity? What is the relationship? What does net income do to the statement of owner's equity? Increase it. See, that's the relation. That's the first relationship. Net income is related to the statement of owner's equity because it increases it. That's it. And then the balance of ending in statement of owner's equity. What is that relationship to the balance sheet? Well, the ending statement of owner's equity is equal to what? The owner's equity in the balance sheet. That's the relationship there. Any other relationships? Did we miss one? Any other arrows?
And then cash balance in the statement of cash flows is
Uh-huh.
the assets in the balance sheet.
Which asset
The
into
cash assets.
cash account? Yeah, the cash account. So the ending cash balance in the statement of cash flow is the same amount or same balance as in the cash account in the balance sheet. So there you have it, the three key connections of these financial statements. All right, just something to keep in mind as you go forward. Hmm? For you guys, it is not so critical, but later on, if you decide to do more accounting, those relation, and I hope you do, I certainly hope you go on and do accounting too, because that's the second part of all the fundamentals you need to know in accounting. Even if you don't go on to be accountants professionally later in life, you'll have enough accounting to help you to function. And if you lose your current job and have to be a bookkeeper or accountant somewhere else, you wouldn't be starting from scratch. You'll know what a debit and credit is. You'll know what financial statements are. You'll know what journal entries are. You'll know how postings work and so on. That's the beauty of education. And that's the beauty of having a little bit of knowledge about accounting. Okay? All right. So today, what are we going to be talking about?
Closing entries.
Closing entries. Now, I tell students all the time, closing entries is supposed to be part of the easiest part of your introduction to accounting. But some students at the end of the closing entry exercise, they still say, "Are you kidding me? What's so easy about that?" I'll see how many of my students today feel that way. All right. But before we go to closing entries, let us review the accounting cycle. Can anybody, does anybody remember that expression? Did we talk about that at all before? The accounting cycle. Did we? See or no?
I think we did it chapter.
Did we do accounting cycle? Maybe. Well, just in case you don't remember, remember we said that the accounting cycle is what we call a series of steps in accounting that we do every single time, every year, every accounting period, every accounting year, which provides us with the information that we need to know about the financial statements and all the transactions that sit in there. We call it an accounting cycle because it is made up of several steps that we follow every single time in accounting. They don't change. Transactions change, but the cycle steps do not change. And the cycle follows a certain order. And if you don't follow that order, you will mess things up in accounting. Because in accounting is a very orderly subject. It is not based on opinions and feelings and subjections and so on, like it is in economics and other subject areas. Okay? It's very specific, very consistent, and follows the very same order every single time. Does anybody remember what I said? Whenever you have a transaction that occurs in your organization, what is the first thing you should do in accounting? Whenever you have a transaction in your organization, what is the first thing you should do in accounting?
You should analyze it.
Analyze accounting transaction.
Yeah, you analyze the transaction, and every transaction that you analyze, you should have what we call a source document to use to help you make the analysis. What is a source document? It's an invoice or a bill of sale or some such document which represents proof of the transaction. See, proof. Don't ever record anything in accounting without proof. Don't ever record anything in accounting without proof. Because if you do, you'll be acting foolishly and unethically. Accountant requires that you have a source document at the time of your analysis so that while you're making your analysis, you have that paper in front of you as proof of the transaction. Without that, accountants don't have any work to do and nothing to do until you provide it. I don't care what your bosses tell you. Even if they threaten to fire you, just tell them, "I'm sorry, but I cannot make a decision on this analysis until you provide me with proof of the transaction." But go ahead and do something. I'll bring it tomorrow. No problem, sir. I'll begin the analysis when? Class. If your boss says do it now, he'll bring the paper tomorrow. When will you?
Tomorrow.
Tomorrow.
Yes.
And I'm telling some of you that because sometimes bosses pressure people and cause them to do things they shouldn't do. Because you feel they're going to fire you, and sometimes they do fire you. Okay? But for the most part, if it's important enough, then maybe you should be fired. Because maybe at the end of the day, your integrity and your freedom may be more important depending on what you are asked to do. Okay, students? And so a lot of accounting people in particular and other people find themselves in an ethically challenging situation. Accountants always, in one form or another, to do the thing that they shouldn't do. All right. So I'm telling you up front, your textbook has a little write-up on ethics, and those in accounting, and those of you who read your chapters carefully, remember that. Do not take any shortcuts. You might consider shortcuts somewhere in your future accounting life, But at this fundamental stage, I encourage you, do not take shortcuts like, I don't think I'll read that. He can't see me anyway, so I'll just skip that. Not a good idea. All right. So those of you who read that little bit on ethics and accounting, you'll see the idea is do not do things that are not ethical. All right. So we analyzed. So now we're in the accounting cycle. The first step in the cycle is to analyze the transaction using some form of source document. Okay. What's the next step in the cycle?
Record.
Record.
Yeah, we record the transactions where?
In the journal.
Yes, and you should have done a lot of that in your homework, I hope. All I should see are journal entries all over the place. Yes?
Yes.
Okay,
Yes.
that's the whole idea. Remember, I told you I did it deliberately so I could sweat you, make sure you do that stuff. Because you see, it is so fundamental to this cycle. If you get this cycle wrong in accounting, everything could be messed up. That's really the point I'm making. Okay? Third step,
Post the journal entries to the ledger and prepare.
and go
Fair
ahead.
trial balance.
So two steps in the third step. Post the journal entries to the ledger and prepare trial balance. Now I saw one or two, most trial balances for the homework were done pretty okay from what I've seen so far. But I saw one or two where folks looked like they broke off running with the trial balance, and then in the middle they were interrupted by a hurricane or something. They just stopped. Lights went out. Something happened that they didn't get to finish that trial balance for some reason. Just 1 or 2%. Okay? Usually if that happens, well, I'm not sure what happened, but remember that whether your trial balances or not, you should try to include all the elements of the trial balance as far as possible, and then add them up anyway. If it doesn't balance, what the hell? It's sometimes trial balances don't balance in real life, in the real world, real money. So if you have a homework piece or an exam piece that doesn't balance, the hell with it. Just throw everything in, add it up, and put the out of balance number there. Just means you made a mistake somewhere. Okay, folks? All right. Remember, the trial balance is made up of a series of debits on the left-hand side and credits on the right-hand side. That's it. Where do you get these balances from? Your statements. Your ledger balances. Go right to your general ledger and with accounts, and whatever the balance is, the debits go to the left and the credits go to the right, depending on what account it is. Let me remind some students also, please, if you haven't gone back to learn which accounts have normal debit and credit balances, you should do that. Otherwise, it'll haunt you a little bit more before you get it. Go back and find out which accounts are debited with normally and which accounts that have normal credit balances. Okay? By now, you should know that asset accounts and expense accounts and losses are all debits. Liabilities and credits are all credit balances normally. And equity. If you're still not clear on those, you should check them out again. All right. What's the normal balance for a withdrawal account, anyone?
Debit.
Debit. What is a withdrawal account?
Making a withdrawal from whatever profit you made.
Yeah. And is it an expense?
No.
No. Why not?
Decreases the owner's capital.
Yeah, it decreases owner's capital. It has nothing to do with covering the cost of normal day-to-day business. Those are expenses. Withdrawals decrease owner's capital or owner's investment. So it kind of represents this. If you invest 10,000 in your own personal business and you go in and take out 2 as a withdrawal, that's not an expense. All you've done is to reduce your investment in your business, which is why I told you last time, you should not do this. Pay yourself a salary, but do not take money out of the business to reduce your investment. Because you need that money to do what? Run the business. Okay? You keep making chunks of withdrawals, so when you won't have any cash, how are you going to pay payroll, EC, and all the other expenses you need to pay? You keep withdrawing money from the business. But this my company, I'll do whatever I want to. And turn it into a song. Before you know it, you and your song will be in the street. All right, step number 4. What's that step? That horrible name for some people.
Adjusting.
Yeah, adjust the accounts and prepare.
Adjust the trial balance.
Yeah, but don't worry, adjustments come with practice. They don't just fall in your lap and say, man, it's great to be home. You have to practice them. There's no way around it until you get comfortable. Okay, so step number 4 is to adjust the accounts. If you have an idea what that is, and then prepare an adjusted trial balance. An adjusted trial balance is simply a trial balance after you make your adjusting entries and come up with the trial balance that have the correct balances in those adjusted accounts. And we'll see that in a little while. Step number 5.
Prepare financial statements.
Most of you should be pros now at preparing basic statements. Plus, I said some things about that this morning, so please be guided accordingly. Because you will prepare some more of them before this semester is over. In fact, one of your homework pieces asking you to do it again, just so you can get that practice in there. And then finally, the final step in the accounting cycle is to
Close the accounts and
close the accounts and
prepare post-closing trial balance.
indeed, and we'll see that in a little while. All right. So those are the steps in the accounting cycle. Sometimes I like to ask that question in a test, just to see if you bothered to remember. And also because it is so critical in the bookkeeping and accounting process. If you violate any of those steps and the order in which they exist, then you will not do well in getting that task done. You may finish it eventually, but not without some blood, sweat, and tears and some confusion. Okay? Whenever I give this question in a test, I don't only look for the 6 steps in the cycle, but I look to see if you recorded the steps correctly. So if you start with step number 1 and then you put step number 3, you will get that wrong, even if the step is correct. Because I want you to put it in the correct order, because that's how it has to be in the real world. And remember, the real world is a very unforgiving place, is it not? All right, especially when you make significant errors. So, we are talking today about closing entries. These are supposed to be very simple thing to do, but sometimes students have difficulty again with 1 or 2 of the concepts. For those of you who read any of this in closing entries, what does your text say about closing entries? Do you remember?
That is made up at the
Say it again.
The accounting period.
What about the period?
The end.
Yeah, well, closing entries occur at the end of the accounting period. Yes, that's very important. Anything else?
They summarize revenues and expenses, and they set the stage for the next accounting period.
Yes, they summarize and close revenue and expenses and set the stage for the next accounting period, such that when the new accounting period begins, revenue expense accounts in the general ledger should be 0, and we start the process for the next year all over again. Okay? For those of you who have read and will read, you'll see that balance sheet accounts and accounting are called permanent accounts. Anybody see that? Am I the only one who read that?
Yes, I read that.
Okay, and what do we call income statement accounts?
Temporarily.
Temporary accounts, and there's a reason. You don't close balance sheet accounts from one period to the next, so they're permanent. Whatever balances are in there, that's it from one year to the next. Income statement accounts are closed every year, so they're referred to as temporary because they're temporary because they close every year to zero and we start fresh again. Okay. Nice short answer question. Differentiate between permanent and temporary accounts. Then you have to say what they are. See how it works? Okay. Just a little kind of study tip there. All right. So if you look at figure one, I don't know if this is in your text, it should be there. It's a nice diagram of the accounting cycle, starting with the business activity of the company. And then the first step is we analyze the account from the source document. See that source document? What is the name of that source document? What is the name of that source document on this page or the one in your text?
Page
Sales
46.
invoice.
Yeah, it's a sales invoice. Okay. So what is a sales invoice?
It's a bill.
Yeah.
What's the page again? Is that our tax?
Sorry?
What's the page
46.
again? 46?
46.
It's 46, yes. So it's a sales invoice. So we analyze the transaction using the sales invoice. And then the next step is to do what?
Record the entry in the journal.
Yes, and what I like about this information, it shows you the entry in the journal entry. So you get to see it. You don't have to figure it out like, man, do I have to make up what it looks? No, it's right there. And since it's right there, do not reinvent the wheel. Just find it and follow it exactly as it is. Because remember, the classroom is the place where you're supposed to learn how to do it right. By the time people get into the real world and start doing their own thing, sometimes they start violating the rules as coming up with the bull crap about how things should work and stop following the rules. Somebody knows all about that. Absolutely. And not only in accounting, in general. Okay, once you get comfortable with stuff, man, we start doing all kinds of weird stuff that are not consistent. Sometimes it still works out to a point, but a lot of times it's very inconsistent with what is required. Okay? So let's use the classroom to learn the correct way. Let's use it to practice in our homework and examinations the correct way. So that when you get in the real world, you'll at least know the correct way. Then you'll have to fight with somebody who says, well, we don't do it that way. And then you say, yeah, but this is the correct way. I don't care. I'm your boss, do it my way. Then you have to decide like, well, it's gonna be my way or the highway and so on. But the textbook doesn't talk about that part of the decision making. That will be your part. Okay? So the journal entry, you see it's there, it's clear, tells you exactly how to record it. And then the third step of posting is right there, tells you exactly how to post. There's no secret. Okay? And then the fourth step, adjust the accounts and notice that quadrant. The quadrant shows you what the adjustments look like. Okay? Remember we said from our text last week that there are two types of adjustments, accruals and deferrals. The two types of accruals and the two types of deferrals. And if you're not clear on that, rush back to your text, to that section, and don't be afraid to look at it again. Okay? And so that quadrant is there just to show you that whatever you're adjusting in accounting, there are only four types altogether and two major types, accruals and deferrals, two types of accruals, two types of deferrals. I encourage every student who is not clear on that to go right back to that chapter and look at those four items in the quadrant. Find out, remind yourself what accruals and deferrals mean. First of all, learn the definition, because examiners love to ask that question. This is so important in accounting. And then the second thing you need to know is which of the two items in the quadrants fall under accruals and which two fall under deferrals. And once you go through that exercise, you'll say, damn, I should have been this conscientious from the beginning. Because then the bulb will go off. Poof. And all of a sudden, adjustments are no longer a mystery, so to speak. All right. And then, of course, step 5 is closing the accounts, which we'll talk about today, and the preparation of financial statements. All right. So then let's see how these accounts are closed. There is a diagram on the closing process, as you can see. I think it's in your text as well. But I'm not going to confuse the issue by talking about that diagram yet. I would rather go and have a chit chat about the closing process first. Then we could discuss the diagram if we think it is necessary. Okay? All right. So let's see. Well, how many steps are there in the closing process? Any reader of the chapter?
4 steps.
4 steps. Now, these 4 steps, folks, are supposed to be simple steps. And most of you might get it first run. If you don't get it first run for some strange reason, don't panic. You'll get it on the second run. But the closing process is basically this. Step 1. All the credit balances in the income statement, we close them to a special account that we call income summary account. Okay? Don't worry about that yet. It's just a temporary account that we use in order to close accounting entries. When all the entries are closed, that account will be brought to 0 and will not be used again until the next accounting year, period. Okay? The second step is to close all debits, income summary. Well, first of all the credits in the income statement would all have to be revenue transactions or accounts. And all the debits would have to be expenses. So once we put it that simply, then that should be something that makes life easier even before we see the closing entries. Okay? Third step is we close the income summary account to the owner's equity, and you'll see why very shortly. And then fourthly, we close the withdrawal account to the owner's equity account. Remember, the withdrawal account reduces capital or investment, and we'll see how the closing entry makes that happen. Question? All right. Okay. All right. And then of course, there we go. Great. And then of course, after those 4 steps, we have some details about each step. Please read them. I'm going to mention each of them in my discussion when we're actually looking at the closing entries, but as students of accounting in this initial stage of your accounting life, please read them. Do not say, I understand the lecture very well, I'm not reading that anymore. I wouldn't suggest that. Everything I say in the lecture will be those things, but I encourage you to read it, because reading it takes you back to it again for reinforcement, and somehow it connects you to the information directly outside of whatever I have to say today. Okay? So please don't fail to read it. Now, if you look at my exhibit, I believe you might have a similar exhibit in your text. This is a summary of how closing entries look. There's a further discussion on the actual mechanics of it, but this is designed to give you a snapshot of how it will look at the end of the day, closing entries. So usually the closing entries begin with what we call an adjusted trial balance. The reason why we call it an adjusted trial balance, because this trial balance is prepared after the adjusting entries are made and posted to the accrual and deferral accounts, and then we come up with new and correct balances for those accounts along with the other account balances that are already correct. Okay? Hopefully that expression about adjusting entry helps. Let me just say this about adjusting entries as an example, and the reason why we call them adjusting. If, let's see if I can pull out, all right, does everybody see the account office supplies, 3660?
Yes.
Okay, let's just use that as an example. Let's say that 3660 was the office supplies balance at the beginning of July. And then, by the way, did I tell you you need a calculator for all of your accounting sessions?
Yes.
Okay, great. Including your examinations. Please don't show up without a calculator unless you're really a math whiz of the fourth kind. All right, so let's say we have 3660 in our office supplies account at the beginning of July. Then we purchase another $1,000 worth of supplies. That would be how much, what total would that be in our supplies account at the end of July?
4660.
Correct. 4660. Now, we know that during July, we use some of those supplies. We just don't know how much yet in dollar terms, correct?
Right.
And adjusting entries is just to find out what we used so we could expense it. Because so far we only have 4660 in assets, correct?
Right.
But we use some of that. Let's say we did inventory at the end of the month, which you should do to keep track of your supplies anyway. Otherwise, folks will be running off with stuff you won't know. People still run off with people's stuff in business.
Yes, they do.
Even in the 21st century. Even in the 21st century.
Well, they still stealing these days.
Yes, they do.
With all, this,
Before the courts.
with all this sophistication and technology, we still teach it.
Mm-hmm. Can't outdo, man. You can't outdo what the human can do.
No, you can't. Ever, never. I don't give a damn what your technology is. Absolutely. Couldn't put it better myself. No amount of technology will interfere with the human heart. A deep thing. All right. So you have 4,660 in supplies. You do an inventory at the end of July. You find out that you only have 2660 left in supplies. What does that tell you? It's amazing how students keep getting stuck on this.
Okay, that you used about 2,000 of it. You have to expense that. You sold that. Sold 2,000 in supplies.
How do you know? Well, not necessarily sold supplies. Remember, supplies and inventory are not the same. Maybe
True.
Yeah.
So they were used.
Yeah. So the asset supplies represents what you use in the business for whatever reason. If it's oil or disinfectant or pledge or whatever the supplies are, tissue, whatever they are, it's what you use in the day-to-day business, not your inventory that you sell to make revenue. Okay.
Okay.
So at the end of the month, you do an inventory, you find that you only have 2660 left. That tells you what?
That you have a balance of 2,000.
Not a balance, but what?
$2,000 we have supplies left.
That's interesting. When you did your inventory, listen to my question again, or statement. When you did your inventory in your company at the end of the month, count everything that's left in supplies, you find out that you have $2,660 left in supplies.
That 60 was used.
How much was yours?
2,000.
How do you know?
Well, it's not accounted for. We can say that. I don't know if it was used or stolen.
Well, we assume for accounting
So
purposes.
what was used from what our opening balance was?
Yes.
The difference.
Yes. Our total purchases were how much? 4,260. Then our inventory shows that we have a balance left of 2660. So the difference has to be what you used. Does everybody see that?
Yes.
That's it. That's all an adjustment is. So now that we know how much we used, based on that, that's why companies take inventory all the time. Did you know that? Not only need to find out who are the cheapest, but also to find out what has been used. Does everybody get that?
Mhm.
Yes.
That's amazing. Okay, let me bring it home then. Let's say you buy groceries. You have all your family in your house and you buy like from the island everywhere and they eat everything up or you don't touch anything. And so you buy groceries 1 month for that are valued at $1,000, right? When you go into your cupboard one week later, you find your groceries worth $100. What happened to the other 900?
We ate it.
Yeah, and whatever you eat is an expense, isn't it?
Yes.
Yeah, same thing. If you have 4,660 in supplies, and then you do an inventory, you only have 2,660 left, you use the rest. That's it. And whatever you use, in this case is $2,000, you have to make an entry. What entry do you make based on that?
You have the credit supplies and debit the expense, supplies expense.
Absolutely. Remember, there's no secret, there's no magic in it. You just have to practice it over and over until you get it. That's all. Once you find out what the amount is that has been used, you debit the expense account supplies expense, and you credit the asset account supplies. So that when you post them to the account, the new balance in supplies would be what? In your ledger.
2660.
Absolutely. And the new balance in your supplies expense account would be?
2000.
Absolutely. Like the guy said on the blog, mud dough. That's just how it is. And once you get that, it's like a light bulb has gone off. Poof! But until you get it, it remains a little gray, like, damn this adjusting entry. The hell with these adjusting entries. Why do you have to adjust anything anyway? Well, you can see based on that transaction, if you don't adjust it, your accounting statements will be incorrect. True or false?
True.
Absolutely. All right, folks. Okay. So closing entries begin with the adjusted trial balance on the left-hand side, which balances. And then on the right-hand side, we have 1, 2, 3, 4 types of closing entries. All right. Let's look at each one individually so that when we get to the details later, it'll be a little easier for us to grasp. Journal entry number 1. What's the date in this journal entry? What's the date? The 31st?
Yes, July 31st.
Okay, let me tell you a little secret about accounting. Dates are an absolute crucial part of accounting. You should not account for something on a date that it didn't happen, students. Now, some of you might even be doing this on your jobs, perhaps past or present, like backdated. Well, all I can tell you is, unless your policy on your job provides for backdating and proves that it's not an illegal activity, accountants don't backdate. We do our transactions on the date they occurred. That's all I could tell you.
But Mr. Wilkinson, I have a question, please.
Yes.
For backdating an entry, wouldn't, like, let's say if you were to accrue for something for services, let's say for the prepaid rent or something of that sort where we accrue, and we need to be able to capture that for the month end as of July 31st. A backdated entry would not be used for that?
when you say backdated, you mean that you do, let's say that the transaction is July 31st and you're doing it on August the 10th? And so since you're doing it on August the 10th, you should go and use July 31st?
Yes.
Well, in accounting, we would not treat that as a backdate. What we say is, if the accrual occurred in July and you prepare the transaction as of July 31st, that's acceptable. Even if you're doing it on August the 10th, because that refers to July's transaction. Do you follow? Does that make sense? Like if you're making the adjustment on the 10th of August, but it refers to the month of July, you can use July 31st as the adjusting date because that transaction occurred in July. However, if the transaction occurred in the first week of August and you're trying to put it in July for some reason to make July look good, you can't do that. Does everybody get that?
Yes.
Okay. Some bosses and some people try to put information in the wrong month or year to make financial statements look a certain way. You can't do that. Information has to be related to the month or the year in which it applies. Okay, so if you are in 2022 and something happened in 2022 and you want to put it in 2021 because the financial statements are not done yet, you can't do that. Like you want to make the balance sheet look better or make the income statement look, profits look better by adding stuff from 2022 into 2021, you cannot do that. Okay, but if you're making an adjustment for a particular month or period because it has to go into that month, then yes, you can go ahead and do that. That's not a problem. All right, something to keep in mind. It's a good question. All right, so entry number one to close the entries. Well, we already told in step number one, we close the revenue account by doing what?
Debiting it.
Yeah, debiting it for how much?
$13,600.
And where did we get that from?
That's the revenue from the revenue account
From the
or the income from the income statement.
Yeah, yes, that's true. But do we have an income statement in front of us?
You got it from the
No.
trial balance.
Yes, we don't have an income statement, but we have the adjusted trial balance, which has what? All the revenues and expenses in it, correct?
Yeah.
Correct.
Yeah. Financial statements are prepared from the trial balance, right, folks? If you are looking at the cycle properly. So even though we have a trial balance in front of us, we can take the information from the trial balance, even though it's the same information that's in the income statement. Because where did the income statement information come from? Right here in this trial balance. Because we always do a trial balance before we do our statements. Anybody knows why? Why do we do a trial balance before we do our statement? Yeah, to make sure that the balances are
The same.
Correct. Balancing.
of course. But remember, not all trial balances balance because people make mistakes, plus people try to hanky-panky the statements, cook the books, do wicked stuff. Okay, folks? And the real experts can hide it and make it balance, and the other ones can't do it well, so it doesn't balance. Plus, people make legitimate errors that show up in the trial balance. So before you do any financial statements in accounting, you have to make sure the trial balance balances and that all the information in each entry in the trial balance is correct. Because sometimes people fix numbers to make it balance, which you shouldn't do. All right. So yes, 3,600, 13,006 in revenue. We debit. What do we credit?
The,
What do we credit?
the income summary.
Income summary for how much?
It's very-
13,600.
Why do we credit it for 13,600? Why not another amount?
Because everything has to balance. What goes on the debit side goes on the credit card, have to balance.
Oh, darn it, who said that?
Akira speaking.
Yeah, I don't know about you guys, but that was music to my ears when you said that. Because both sides have to always balance. Okay, am I the only one who's excited about that answer? The reason why I said that is because it is so fundamental to the accounting process. And anything that violates that is going to make an unholy mess and cause some people some jobs and reputations, even depending on how serious it is. All right. Is the first entry done? So now we've closed the revenue off the income summary, so that account is done. Anything else for that entry needs to be done?
No, that's it.
Stop it. I know my glasses don't work well, but I saw something that looks like a note there to me. I see a narrative. Am I the only one that's seeing that? The narrative. Hello?
We can't see the narrative.
There's no narrative in your text?
Oh, in the text.
I mean, can you see the narrative on my screen for that entry?
You need to close the revenue account?
Yes, what's wrong with that? That is a very important narrative. Remember, I told you before, every journal entry you make should have a narrative that tells you what you did in that journal entry. In practice, in the real world, a lot of people leave it off because they don't want anybody to know what they did. They want somebody just to figure it out. And after a while, everybody's forgotten what that is and have to sweat to figure it out. But in practice, we should have a narrative on every entry. For those of you who still pass entries to work for transactions, every entry you pass, debit or credit, should have a narrative saying what that entry is. No matter how obvious it is, you have to write to say what that is. It's called an audit trail. And anybody who doesn't want to write a narrative makes me wonder, like, why not? You don't want to say what this transaction represents? If not, why not? Okie dokie. For some of you might become supervisor of something one day, you might have to see some entries that you have to approve. And if you don't see a narrative on it, then you remember, you know what? I did the class with Mr. Wilkinson, he said they should have a narrative. Why wouldn't they say what this is? Then you go to them and say, excuse me, Susie, what is this? She said, why you want to know? Then you know something isn't right. Why do I want to know? Because I'm your supervisor and I need you to know. I need to know. Not only do I need to know, I need you to write it on this entry before I prove it. It's called a control measure and an audit trail. Okay. I know perhaps I made it seem dramatic, but you will discover in the real world, if you haven't already, that the drama is justified. Because sooner or later, if you're not doing it right, it catches up with whoever is not doing it right. And then you end up in front of the courts on a mask and nobody knows who you are anyway, being charged with something or out of a job because you're in the middle of something because you didn't follow the rules. All right. So entry number one is done. We have our debit and credit closing the account, and we have our narrative. It says exactly what we did to close the revenue account. So anybody picking that up in 50 years, just look at that transaction and say, oh, this is to close the account. They don't even have to try and figure out what happened. They might want to, but it's very clear once we make that narrative. Okay. All right. Entry number two, close the expense accounts. Well, how many expense accounts do we have in that trial balance? Anyone?
5.
5. And according to the rules of closing the accounts, remember those 4 rules against the rules. Once you learn the rules, man, it becomes a piece of cake sometimes with these things. But when you take a little while to learn the rules, you suffer a little bit until you learn the rules. Okay? The rule says for closing expenses that we debit income summary and credit each expense account. That's it. Simple as that. Now, if you miss that rule, then you're going to miss the boat, wouldn't know what to do. Be stuck with a very simple thing. What's the narrative here?
To close expense accounts.
As simple as that. But as it is with everything in life, it's the simple things that creates the biggest nightmares. I'm sure you all know that. The big problems at work are not the ones that create stress. It's the little ones, like somebody told you something in a way that you don't like. And so you're upset. And because you're upset, you don't do the work for that day. Or you this or that or the other thing. And before you know it, you have a big mess that starts with a little thing. It's the same thing. It seems so simple. To close the expense account, isn't that obvious? Maybe. But the persons who came up with this 500 years ago knew exactly why they came up with it. And the rule still works. Make the narrative. Okay? If you do a homework or examination piece for me and I'm marking, I don't see the narrative, you'll lose a point because I give a point for the narrative. It's that important. Now, after the second closing, look at what happens to the income summary. Does everybody see that? Notice, have you seen it?
Yes.
So the income summary has the revenue on the right, credit 13.6, the expenses total on the left, and then we have this 3,960. What does that represent?
That's the difference.
Recurring.
The net income amount?
Yeah, that is the net income amount. Okay? That 3,960 is the net income amount. Notice it's sitting on the what side of the income summary?
On the
Why is it
debit.
on the credit side?
Is it on the credit side?
No, it's on the debit side.
Oh,
Yes,
I
remember?
think about net some.
Yeah, net debits are always to the left of the account. Credits are always to the right of the account. Any account that looks like a T is an account. It's a ledger. Okay? The reason why it's on the left-hand side is so that income summary can be what? Balance to 0. Okay? And so that we can reflect the net profit for that particular period. So if we have the 13.6 on the right, profit revenue, and the 9.6 for our expenses, so the 3,960 in the income summary represents net profit. Okay? All right. Is there any magic to this? No way. You just have to go through it. Right? It's like being married. There's no magic to being married. You have to deal with it day by day, year by year, decade by decade. There's no magic. Now you can create some quote unquote in-house magic, but the process is the process. All right. Entry number 3. What entry is this now? What that 3,960 that we saw a minute ago, that profit, we are now closing that profit to what?
Capital.
Yes, because remember, what does profit do to capital?
It increases.
Yes, yes, yes. And so this is how we transfer profit to capital. We debit income summary. That's why we saw it up there earlier as a debit. And we credit capital. And I'm sure everybody sees the narrative now because I made a big deal about the narrative. So I'm hoping that just jumps at you. Any other entries to close this? Step number 4, is that something we need to look at?
Withdrawal account.
Yes. What we're doing in step number 4 is transferring the withdrawal account to what?
To the owner's capital account.
The capital. Now, notice the entry for the withdrawal. Remember we said that withdrawals do what to investment or capital?
Decreases.
Correct. Hence, We debit capital for the withdrawal amount. And we credit what?
Withdrawals.
Withdrawals for the withdrawal amount. What's the narrative?
To close the withdrawals account.
Okay, to close the withdrawals account. Now, folks, believe it or not, that little song and dance is really how we close accounts in accounting. For some people, it's their worst nightmare because they take a while to get it. And for other people, it's like, man, that was a piece of cake. Well, let's see if it's a piece of cake. Let's go a little further. If you look at this revenue account, what is this green thing we're looking at in the text? What do we call this thing, this green thing? What do we call it? What's the name for it? Why are we waiting? It should fall off our lips by now after all that homework.
The general ledger.
Is it a general ledger?
Looks like a T account.
Well, is it a ledger or is it a journal?
Journal?
No.
Look like a ledger to me.
A ledger?
I know,
It
it's
doesn't
tricky.
have a narrative.
How do you know whether it's a journal or a ledger?
The narrative?
Well, both the narrative, well, yeah, the journal should have a narrative. So based on that particular concept, is this a journal or ledger?
A journal.
Is there any narrative here?
No, this look like a ledger to me.
What else makes it look like a ledger?
It has the items, the adjusting and closing entries.
What else?
It has
Post
from the journals.
Yes, all the postings from the journals are here. Remember, journals do not have any postings. All they do is journalize each transaction, one by one by one with a narrative. Whenever you see an account with postings, it's called a ledger, okay? Keep that in mind so you don't mix them up. So what are we looking at here?
ledger.
Ledger. What's the balance in this design revenue account at the end of July? Before the closing entry.
13,600.
And when we post the debit from the closing entry,
It brings it to 0.
brings it to 0. Do you see that, folks? So come August 1st, we start fresh posting. That's simple as that. What about the income summary? Does it have a balance? Does the income summary can have a balance in it?
Yes, it has a balance of 13,600. No
Is it
credit
clo-
balance.
Is it closed yet at this point?
No.
No. But the revenue account is closed, correct?
Yes.
Fantastic. Let's move on. All right. So what do we have here? Anybody? What's all that junk? Not junk, you know what I mean? What is all this? First of all, are these ledger accounts or journals?
Ledgers.
Yes. Ledgers are where we post our stuff. Posting is what we do to keep things in order and accurate to see what has gone by and what our current balances are. So what type of accounts are these?
Expense accounts.
Expense.
All right. What's the balance of wages before the closing entry?
$5,520.
After the closing entry is posted?
0.
Okay. What's the balance in depreciation before the closing entry?
$300.
Debit or credit?
Debit.
Why is it a debit?
Because expenses have a normal debit balance.
And which expense is this?
That's depreciation expense.
Wonderful.
Office equipment.
Absolutely. And there's a reason why I'm quizzing you like we're on trial in a court. The reason I'm doing that is because I want you to talk. Because I want you to say it. Because sometimes we have everything in our head. When it's time to say it, we're stuck. Like, I know it. I'm not used to saying it. It's like for some people, they have trouble saying "I love you" to someone, like their spouse or somebody they love. Because like it's in their head. I really love this person. It's in their head, but they don't know how to say it because they don't say it often enough. Accounting is like that. You have to say it so you can become familiar and comfortable with it. And the only way you're going to become comfortable with it if you say. Right? Did I make that a little dramatic? I want you to remember that's the only reason. All right. So, did we close all of our expense accounts per transaction too here?
Yes, all appears to be closed.
When you say appears, what does that mean? Is that a yes or no?
Yes, they have a zero balance.
Fantastic. Remember, accounting is not like the law. Like, Your Honor, it appears that the circumstances surrounding the situation would suggest. Accounting is not like that. It's either open,
Or closed.
absolutely. We don't do that legal mumbo jumbo. Accounting is a very precise language, unlike the law. By the time lawyers are finished, people are more confused than when we started. All right, accounting is not like that. If you find yourself confused in accounting, you're doing something wrong, either by error or on purpose, because it is not designed to create any confusion whatsoever. So thank you very much. The expense accounts are closed. What about the income summary account at this stage? Did we make any adjustments there?
No.
Why? Look at it again.
Yes, we did. The
What
3,960.
Okay.
That's the balance. What's the adjustment?
The total sum of the expense account amount.
Yeah, we debit, the adjustment is, we debited income summary for 9640, which represents the total expenses. See how I said that? Now, don't worry if you don't say it exactly like that. It's not an overnight affair, but that's what I mean by an adjustment. Remember, this adjustment is the same as the other adjustments we talked about. Adjustments only mean what? Making entries to correct account balances. Do you follow that, folks? That's all adjustments are anytime, no matter what type they are. So in this case, we debited income summary, and now the balance in income summary is what?
3,960.
3,960. And that 3,960 represents what again?
Balance in the income summary.
Yeah, which represents what again? What statement is that sitting in? Just trying to help you practice how to connect the dots. Well, that 3,960 represents the difference between revenue and expenses, correct?
Income statement.
Yes, and what is it called in the income statement? What's the name for the 3,960 in the income statement?
Is it the net income? I mean,
Yeah, yes. Net income or net profit, absolutely. Suppose it was the other way around. Expenses were greater than revenue. What do we call it?
A net loss.
Net loss, okay? Folks? So as you can see, the principles in accounting hardly ever change. All right? So now we have an interesting situation. In this particular exhibit for capital, we did an adjusting entry for capital, didn't we? Anybody remembers what the adjusting entry was for capital we did earlier?
is it when the balance was posted to the, wait. When the income summary balance was credited to the capital account.
Yes. What was the original? Yes, that is absolutely correct. What was the original journal entry in the original closing entry? What was the original closing entry? For this transaction?
We were debited capital and we credited the income summary account, the net income. Was that the original entry?
Who agrees with that? She said we debited capital.
Debited
Now,
the
if you look at this exhibit on your text, you check the debit credit column, you'll see there's not a debit there. So that means we made another entry. What's that entry for this 3960?
We credited.
credit the capital,
We credited capital and we debited
the income summary.
income summary. Okay, folks? So remember those 4 steps we did initially? All we're doing now is showing them being posted to each ledger account. That's the beauty of accounting. And each time we do a post, that's why the journal entry has to be correct. Because if that's wrong, everything else is wrong. Right? So if we take that journal entry and we post it to J Miller Capital, we can see that with that credit to capital, J Miller's capital has increased or decreased.
Is it increased?
Why would you say that?
Because it's a credit.
To the posting, the balance increased
The balance increased from what to what?
from 40,000 to 43,000.
Absolutely, just like your checking account. If you had $5 in it on Friday and you won the lottery for 10,000 today, on Monday your account balance would have increased or decreased.
It will gone up, increase.
Yes, from $5 to what?
You said 10,000.
I did.
Okay, the 10,000 plus the $5.
Which is
10,005.
yeah. It's funny how we look tentative even with our numbers, even if it's our isn't it? Could I have been that lucky? Should I say it? Should I really say it? Yes, absolutely. The same thing. All right. So that entry says that we increased capital by 3960, which is a net profit. And so capital goes up. Now, folks, sometimes students only look at portions of the account, you know. They don't look at the details. For some strange reason, but you have to remember accounting is a very detailed subject. We don't deal in the surface stuff in accounting. So when you look at an account, you have to look from the left at everything. Okay? Owen, are you married?
No, I'm not.
Oh, no. Okay, that's good. This is for you. When you're dating, you have to look at everything, not just one section of the account.
True.
Okay? So you have to, when you look at a ledger account, you have to look from left to right. In this example, with income summary, the account name on the left-hand side is income summary. The account number is a capital account. You see those details. Then you have the date item, which is a closing entry, posting reference. Now, in the posting reference column, what does J4 mean?
Journal 4.
Meaning? That's correct. What does it mean?
That's a posting from the journal account.
Yeah, which page 4 of the journal? Now, we don't normally say journal account, right? Even though I know what you mean. A
Yes.
journal is a journal, and an account, yes. Okay, so J4 means that transaction came from page 4 of your general journal. In the old days before electronic accounting, we had pages, page 1, page 2, because they were done manually on line sheets, 1 page at a time. We have an electronic system now as well, but they have pages too, as well. They're just electronic. So in this case, all of the transactions here came from J4, journal entry page 4. I'm just saying, look at the entire thing. Don't just look at sections of it. Right?
Are you telling me that or someone saying that?
All right.
You guys gotta continue to stay on it. That's live feed, so let me go do about that.
Okay. All right. Any questions so far? Well, if that's the case, then can somebody explain what's happening in Exhibit 4.5? Make a guess. You don't have to be right, remember?
We are closing the withdrawal account. So we credit and debit it to the capital, which decreases it.
Yeah, we debit the capital to decrease the capital because we have to do that. We already said withdrawals decrease capital. This is proof of it. And what's the credit side of your entry again?
Withdrawals.
We credit withdrawals, yes. Because remember, when the owner withdraw the money, what account did we debit?
Capital.
No, we didn't.
Cash.
Cash.
No, we didn't. Withdrawal. If you withdraw cash, you normally wouldn't debit cash. What would you do? The cash.
You would credit the cash.
Credit cash.
Now, let me, a little rule reminder. Debits increase cash. Credits decrease cash. Remember those rules? You have to go back and learn them. Debits decrease cash. Credits increase cash. Sorry, debits increase cash and credits decrease cash. Debits increase assets, period. Credits decrease assets. Remember those rules? What do debits do to liabilities?
Increases liabilities.
And what do credits do to liabilities?
Increases.
Yes. What do debits do to equity?
Increase it.
Decrease.
Decrease.
What do credits do to equity?
Increase.
What do debits do to revenue?
Decrease.
Credits?
Increase.
What do debits do to expenses?
Increase.
Credits?
Decrease.
Okie dokie. So whenever cash goes out or is paid out, please don't say debit to cash. Because when cash goes out, that is a decrease in cash. And a decrease in cash is represented by a debit or credit.
Credit.
Absolutely. A decrease in any asset is represented by a debit or credit.
Credit.
Absolutely. Sorry. There's no way around the rules. It's okay if you don't get the rules overnight. They're not designed for everybody to get it at rapid pace. It's all different. But it is designed for everybody to get it eventually. Okay, so you just keep working it. Eventually you'll get there. All right. So we debit capital for the withdrawal amount and credit withdrawals for the same amount. When we make this posting to the withdrawal account, what will be the balance in withdrawal account?
0.
0. So that means the withdrawal account is a temporary account or permanent account?
Temporary.
Fantastic. Is the income summary a temporary account or permanent account?
Temporary.
Thank you. Which accounts are permanent only?
The balance sheet?
Yes,
Yes.
Monica, this stuff is actually working. Okay, that's what I'm talking about. Way to go. All right, so now that we've done our journal entries for the closing entries, we've posted them to the ledger accounts to bring them either to balance or their correct account balances. We can then go ahead and prepare what we call in accounting a post-closing trial balance, which represents all the account balances the closing entries are made, which means that the post-closing trial balance should only be made up of which accounts?
Assets.
Balance sheet accounts.
Balance sheet accounts, yes. And balance sheet accounts are made up of which three groups?
Assets, liability, and capital.
Okay. So all of a sudden, once you understand the basic rules and follow the steps properly, remember, don't miss any steps. Don't ignore any steps. Don't misinterpret it and interpret any steps in terms of the closing process, just like the accounting cycle. If you make any missteps, you will make errors, have to go back into the beginning, like everything else in life. Accounting is no different. If you miss an important step and things get messed up, you have to go back and try to fix it. Hopefully you can fix it. Hopefully you can even find it to fix it. All right. Usually when an error occurs, a legitimate error occurs and you cannot find the error, accounting has a means to write it off. But anytime companies have to write off certain kinds of mistakes, it costs the company money. So companies don't like writing off stuff. They like finding errors. But as it is with some things in life, we sometimes don't find them. And we are forced to write them off. The question we ask after that is, who is responsible for the error, and does this error require any form of punishment? But that's a different thing. That's a non-accounting issue initially. All right, any questions so far? Closing entries. They're not difficult, as you can see. They have some steps, follow the steps, follow your text. When you're doing your homework, follow your text. Make sure you do it exactly the way it's in the text. Follow it exactly the way it's in the text. I don't mind if you do that. I want you to do it that way because that's the correct way. Don't say I'll modify what I'm doing a little bit because I don't want it to look exactly like my textbook. I want it to look like your textbook so you understand how to do it the correct way. All right. Now, in the discussion of closing entries is the discussion of reversing entries. Now, accounting only reverses certain types of entries, maybe one or two, and reversals tend to occur on the first day of the new period. Yeah. Did anybody read that, reversing entries?
Yes.
Okay. Can somebody just read that paragraph, maybe on reversing entries, so we all can come on the same page with this? Because sometimes this is confusing. Beginning a reversing entry.
A reversing entry is an optional journal entry made on the first day of an accounting period. It has the opposite effect of an adjusting entry made at the end of the previous period. That is, it debits the credits and credits the debits of any early adjusting entry. The sole purpose of reversing entries is to simplify routine bookkeeping procedures, and they apply only to certain adjusting entries. Deferrals should not be reversed because doing so would not simplify bookkeeping in future accounting periods. As used in this text, reversing entries apply only to accrual, accrued revenues, and expenses.
Thank you very much. Thank you. Excellent. So based on what she said, if you see any deferral entries, you don't reverse them. Now you might say, what the hell is deferral? Did we do deferral? Yes, we did. Go back to the previous chapter and see what a deferral is. Does anybody remember what a deferral entry is or transaction? Don't say it's the opposite of accrual.
It's just an extension, eh?
No.
Again?
revenues received for work not done,
Why is that a deferral?
receive in advance,
Yeah,
because they haven't earned the funds as yet, earned it as yet.
correct. Because they haven't earned it, that means the earning of the revenue is deferred or put off until you earn it. Does everybody see that? The word defer means to put off until later. So somebody says, will you marry me? It says, now that you've done accounting, I'd rather defer that. And then you say, yes, I thought you'd say yes. Let's go. And he said, that doesn't mean yes, Johnny. That means I'd rather put it off. So a deferral is when you earn, in this case, when you earn the revenue later. An accrual, on the other hand, is what? A deferral says you have the money, but you haven't done the service. An accrual says what? The opposite, which is?
You did the work but wasn't paid.
Yeah, the work was done or you did the work and wasn't paid. So it's kind of the opposite of deferral. Reversing entries to make your life easy only refers to accruals. Period. And let's see how that works. If you look at the example, the journal entry, notice the adjusting entry on July 31st is what?
720.
Yes, but I was hoping that we'd get a little more intimate and say that we debited wages expense for 720. Because remember, the more you say it, say baby, say. The more you say it, the more comfortable you become. So we debit, yeah, wages expense for 720 and
Recredit wages payable for 720.
excellent. That's the adjusting entry at the end of July. And what that tells all of us as budding bookkeepers and accountants is that wages expense that accrued at the end of July, we know that the transaction was 720, and the company is going to pay that in the new month, which is August. Any narrative? Any narrative?
Wages.
Accrued unrecorded wages. Okay, so accruals mean what? It's due because the person has already worked, but you have not paid them yet. You will pay them next payday. I hope everybody gets that because this is something that we see in practice all the time. Okay? Especially the person who's waiting for the money. Imagine next payday come and your payment this month is not paid. What are you gonna do? Start making noise? Yes, like where my money? Don't cause me call the police or whatever. Get vexed in this company or whatever. All right, so this transaction is very common for companies. All right, once we make the journal entry, what do we have to do next with this adjusting entry?
Record.
Well, we already recorded. That's what journal entries do. What do we do after recording?
Post.
Yes. Does anybody see the ledger accounts that we're posting to?
Yes, yes.
Yes.
Yeah, it's right at the top. Those two tier accounts, nicely labeled, wages payable and wages expense, they are ledger accounts. And ledger accounts are the only accounts accountants post to. Remember, don't be shy. The process never changes. Only transactions and amounts change. But the process and the cycle is always, always, always the same. Analyze, journalize, post. See? Almost a song like analyze, journalize, post. Analyze, you put music to it, post, like that. Doesn't ever change. You don't have to worry about changing stanzas. It never changes. All right, so we posted those accounts, the relevant debits and credits. And then in our next transaction, what happens?
Child money, nothing to go to the post office. Money not turned about the fourth of it.
In our next transaction, what happens?
They paid 4 weeks wages
You know,
to assistant for $720.
well, you said they paid 4 weeks wages. How do we know?
That's what the narrative says.
Do you believe the narrative?
Yes, it should be correct,
Good, just like in the real world. People shouldn't lie on the narrative, correct?
right?
But that doesn't mean they wouldn't try sometime.
They do.
They do. That's my point. So the narrative says that, and we have to believe the narrative. 4 weeks at 720 equals how much?
I get the calculator.
It's supposed to be right there at your fingertips, everyone. Don't forget you need to calculate for every single accounting class.
$2,880.
I don't think so.
No?
4 weeks?
4 weeks at 720, yeah.
Yes.
2,880.
Yes, 2,880. Yes, it is. 720 times 4.
So you're sticking to that?
Yes.
Okie dokie. So what does the 4,800 represent?
Monies that was left.
Monies that were left.
In the wages expense account. I don't know.
Getting warm. How much does this employee earn per month? Anybody know? Based on what you see.
They earn about $2,880 a month. If they're paid 720 a week, an average monthly is 4 weeks. So that will be a $2,880 that they earn monthly.
Okay, so the rest of that wages expense of 480, what is that?
That perhaps was prior month wages that was paid.
Indeed. But based on the information that we have, this employee, now notice what is interesting. Paid 4 weeks wages to assistants, 720 of which accrued in the previous period. So that means that 4080 looks like that is made up of which month? Current and period and previous. Okay, of 4080. Now look at what's happening. The company owes the current month, and the company owes for the last 3 days in the previous month of July. We did that in the previous chapter even. So when we add the 720 and the 4080, how much was paid out in total in wages?
4,800.
$4,800. Does everybody see that? Now notice when it's posted, however, 3 separate accounts are posted. By the way, does the double entry apply here? For every debit, there must be a credit?
Yes.
Yes.
Double entry always apply.
Always. What is different about this journal entry than from what we've seen before?
It recorded the 720 and the 4,080, but it still totals the 4,800.
Correct. It has 3 parts instead of 2, right?
Yes.
Yeah, but even though it has 3 parts, it still balances because credits total with the debits total. So the point here is, even though there might be multiple parts to a particular journal entry, as long as the debits are equal to credit, your journal entries does not violate the rules. That's the key. We call this a compound entry in accounting because one of the accounts have more than one item sitting in it. We call it compound, but as long as they're in balance, the journal entry is fine. Notice the postings. How much was posted to cash?
4,800.
Increase or decrease to cash?
Decreases to cash.
Cash.
And what was posted to wages payable?
$720.
What would be the balance in wages payable after that posting?
Zero.
Yes, 0. Does anybody know why she said 0? And she said it confidently correct. Why did she say 0?
Because you'll have to close.
Yeah, what was the balance in wages payable before this entry was made?
0.
No. Remember, at the end of July, we
It was 720 on the credit side.
correct. And so when we do this entry on August 23rd and
It was
debit,
720, so that's why it's gonna be 0.
absolute, which means that we no longer owe this employee that money. You follow, folks? Without these entries, you will not remember, especially if you have several or many employees. That's the point. Okay? And what is the balance in wages expense? Sounds like a NASA employee typing. Okay, wonderful. Something? Am I the only one hearing this?
Yes, I'm hearing it as well.
Somebody mic is open. I guess.
Yes, the mic is
Typing on, they're using their phone and typing or something.
indeed. Okay, it's gone quiet for the moment. All right. So what is sitting in wages expense account after this transaction is posted? You guys just look at it. If you just look at the ledger.
4,080.
Yeah, 4,080. Remember, accounting is designed to give you a picture of everything. You don't have to guess. If you're doing accounting right, just look at the journal or look at the ledger and you'll see. That's the beauty of accounting. You don't have to try and figure it out once you've done what you're supposed to do. All right. Why is the balance in wages expense 4,080 and not $4,800? That was paid
Because
out of salary.
we needed to take out the 720 from the previous month.
Correct. Did we account for the 720 in the previous month?
Yes.
Yes, we did. When we made that adjusting entry at the end of July, we accounted for the 720 by debiting wages expense, which was posted in July to wages. All right, that's the importance of adjusting entries so that we keep our accounts correct and we don't have to remember what happened because it's right there if we do it when we're supposed to do it and if we do it correctly, which is why a lot of companies' accounts are messed up because we don't do things when we're supposed to. We forget. We forget to do it at all. And sometimes when the time comes, we forget how to do it correctly. And under pressure, we put any old thing just to get by. Because we figure nobody will find out anyway, for some reason.
Yeah, it'll always come back to hunt you.
Always. Always. All right. All right. So having said that, let's look then at the sequence of events of the entries we already talked about in this particular. This thing we're looking at, is that a journal or an account?
An account.
It's an account. Now, since you're all familiar with accounts because we have looked everything over by now, you can see what the components of the account is and all that. Let's look at why the reversing entry becomes important. It's not a big deal. You don't have to do it, but if you don't do it, sometimes it can raise confusion, especially you have a whole lot of employees trying to keep track of them. Let's see if you can figure it out. All right. In entry 1, we adjusted the wages expense for 720 in July. True or false?
True.
True.
True. So on July 31st, when we made that adjusting entry, we posted to the account as a debit because it's an expense. And now wages expense goes up to what?
$5,520.
Correct. Then we close the 5,520. Remember the closing entry that we made at the end of July to income summary. So we debited which two accounts for that 5,520?
Income summary and wages expense.
Which
Correct.
one do we debit
Income summary.
and which one do we credit?
Wages expense.
Indeed. And when we post that to the wages expense account, as you can see on July 31st, then the balance in wages expense becomes what?
Zero.
0, which means that effectively the month of July is closed, correct?
Correct.
Okie dokie. Now, on August 1, it is recommended for accruals, and this is an accrual that we're dealing with. Remember, accruals represent what? What you have incurred but not yet paid. What you have incurred but not yet paid. In this case, you incurred salary expense, overtime worked in July, but you're not paying it until August. So on the 1st of the new month, you are required to pass a reversing entry for the amount that you owe. And what is that entry?
We credit wages expense,
Yes.
debit wages payable,
How much?
720.
So it's an exact opposite of the first original adjusting entry, correct?
Correct.
Correct. Now, don't add anything more to it, accept it as that's what you do. Once you make that entry on the 1st of August, you go ahead and post it on the 1st of August. Do you see that posting?
Yes.
Once you post that, what is the balance then of wages expense on August 23rd when you make the salary payment? How much did you post the salaries?
4,800.
But the balance is actually what?
4,008.
Does anybody know why 4,080 and not 4,800?
Because that's the balance left after we took out the 720.
Yes, the reversing entry sets up in the account the correct situation so that when salaries are paid in August, the wages expense account automatically adjusts itself to the correct wages expense balance. Does everybody see that?
Yes.
Okay. Now, some of you may have to just go back and play with that a little bit, but that's okay. Play with it a little bit. That's ultimately what happens. Okay. Just follow the steps entry by entry. Look at the wages expense account to see what the impact is when you post it, what the balance is, and you'll see very clearly. The reversing entry allows for the correct balance to come up in wages expense in August when salaries are paid. If we did not do the reversing entry on August the 1st, what would have been the balance showing in wages expense on August 23rd?
$4,800.
Would that be correct?
No, that would be incorrect because we didn't pay the 720.
Correct. When did well, we paid it, but we paid it, but we expensed it when?
the following year.
No,
On August 1st?
we didn't expense it on August 1st. We just reversed it on August 1st.
Oh,
When did we actually expense?
July 31st.
July.
July 31st.
Yes, because the employee did the work. If you read that section, during the last 3 days of July, after July's payday was done.
Mhm.
Okay. Now, if you didn't read that section, then that 720 will be like a monster. Like, what the is that? And why is that there? And how come? But once you read that section, or you remember that, you'll see how it all ties in. Okay. And this is usually only done with transactions like accrued salaries. Okay? If there's another accrual like accrued expenses, we do the same thing. Okay? Let's say, for example, if we owe BEC for July and we don't pay them, we'll have to do the same thing. Electricity expense, electricity payable. On the 1st of August, do a reversing entry, same as our wages. And then when we pay BEC, we make the same entry, so that the electricity expense account will show the correct balance as the wages account. Okay? And again, you don't have to walk around with this in your head necessarily for the rest of your life. But once you understand it, and because you battle with it with homework and exams and all that, if you ever go to work in accounting, you might have to remind somebody, excuse me, we need to do a reversing entry because it's going to tie us up eventually. We won't be able to keep track of these accruals. And somebody said, I never heard about that. I said, because you didn't do an accounting class. But I did. And then you get your textbook, dust it off, and find out how to do it if you don't remember. The important thing, you have a point of reference. Okay. All right. So that's it. Your closing entries and your reversing entries. They're not difficult at all. If you look at the next deferral, one was an expense. This one is revenue. For this one, the reversing entry is done on August the 1st as well. But instead of being an expense that you're reversing a what? Accrued revenue account. Anybody remembers that account from previous discussions?
Yes.
Yes, remember on July 31st, in this example, we have this accrual where we've done the work, but we've done the work, but we haven't what? Received the revenue. So we debited accounts receivable and we credited design revenue, hoping that we'll get paid for the work we've done. Okay, so this is an accrual as well, which means on August the 1st, you have to do a reversing entry so that when you finally get paid on your accounts receivable, your accounts will reflect the correct balances, just like with wages. Okay. All right. So the reversing entries are not difficult. Do not make it unnecessarily complicated. Remember, on August the 1st, only for accruals, we will reverse what? Whatever accruals we did on the end of the previous month. That's it. But don't forget to post. There's a lot of people make that mistake. They generalize the hell out of stuff and don't post it. That's the beauty. You have to remember, even with electronic accounting, you still have to press buttons to post. So if you do the journal entry, the computer is not smart enough to just press its own buttons. You still have to press the right buttons and post. If you don't do that, then your entry is going to be, your ledger is going to be wrong because the posting would not have been done, whether it's manual or electronic. Okay? Until and unless we have software where as soon as you do your journal entry, it posts automatically. Journal AI, journal entry recognized and posted, something like that. But for the most part, we don't have that yet. Okay? All right. Now, I hope most of you got to looking at the worksheet for the accountant. If anybody panicked when you looked at the worksheet, that's okay. We all panic when we see the worksheet. But the worksheet is really the accountant's tool for simplifying his or her work. And usually once the work, and that's where we do all of our dirty work in accounting. If we make an error, we correct it in the worksheet. If we left out something, we add it back in the worksheet. If we had something in that we just shouldn't have, that we take it out. We do all our laundry in the worksheet. so that when we finally do our accounting statements, we hope that they are correct. Okay? So the accountant's worksheet is exactly that, the accountant's worksheet. And so again, there's no magic to the accountant's worksheet. There's only doing it. Did anybody look at the worksheet?
Yes, I did. I did panic, but then it seems so efficient when I look at the examples when they said to go across and see example for the accounts receivable, how they debited and stuff, and you come across it's self-explanatory and easy to follow.
Absolutely. All right. And so I am so happy you put it that way for your colleagues. For those of you who might still be panicking about the worksheet, don't panic. Jump in and start swimming. You'll discover that it's not as much a nightmare as you thought. For example, notice with all statements, the worksheet has a heading as well. It's called company worksheet for whatever period, in this case, July 31st. Remember when you do your homework and examinations for me, you have to put the headings on all statements. If you don't, you will lose easy points. You don't have to think about the correct thing to write, just put it. Name of the company, name of the report, and the relevant date. 3 points generally just for doing that. And the reason why I do that is to encourage you to do that, okay, every single time, so that people are not looking at something that has no name and no period. In accounting, we always need to know who it is, what it is, and for what period. Always. We hate stuff that show up without those 3 things. Because without those 3 things, it's hard for us to be efficient in our work. Then we have to start guesstimating and doing all kinds of weird stuff that other people do. And we don't want to do that. Okay? So if we look at this worksheet past the heading, we see that it has several columns. The first one is the trial balance, followed by the adjustments, followed by the adjusted trial balance, followed by the income statement column, and then the balance sheet. Stuff that we already know, stuff that we've beaten to death anyway in one form or another. All right. So the first thing we do in the worksheet is to what? Put in our trial balance. That's the easiest part of all. Anybody gets that wrong should be shot.
Excuse me, Mr. Wilkinson.
Yeah.
So this worksheet is the culmination of all transaction done for the month of July. Everyone.
Right.
Okay.
But again, this
It
information
must be represented. That's what you're trying to say. Any accounting done for that month.
yes.
Okay.
That doesn't mean that all accountants use a worksheet.
Okay.
Remember, like some mechanics, they use certain tools and others use their hand. They say, man, I need a tool. Like that.
Okay.
But if you want to do a great job of what you're doing as an accountant, it doesn't hurt to use a worksheet to do all your dirty work. And when you've done all your dirty work, at the end of the day, you're hoping that your reports will be correct. All right, that's the whole idea. And that's why we call it a worksheet. All right, so that's a good point that you made. So the trial balance goes in first. Notice the trial balance includes all the stuff that we talked about already, all the debits, all the credits. What is the total of the trial balance in this worksheet?
$60,080.
Indeed. And then the next column, notice in each column they have debits and credits. I don't think I have to say that, but just throwing that out. So the next column in the worksheet are your adjustments. Now, folks, the fact that you have adjustments in the worksheet doesn't mean you don't have to do the journal entries. You do, because the adjustments in your worksheet come from the journal entries. Do you follow that?
Yes, sir.
Okay. So I said, oh, thank God, it's just the worksheet. I don't need to do it. No way. This information in your worksheet comes from your journal entries. The information in the trial balance comes from your trial balance in your accounts. So the worksheet is just picking up what you have already and what adjustments you need to make, so that at the end of the day you have clean statements that are correct. Now notice these adjustments have letters A, B, C, D, E, and F. Anybody notice that or just me?
Yes, sir.
Yeah, we usually letter a journal and adjusting entry so we could track them. Because remember, every journal entry has a debit and a credit, correct?
Yes.
So we give it a little letter. Wherever we see A at the top, there should be A where? Somewhere else.
Mm-hmm.
Make sense?
Makes sense.
Good. So in this example, the first adjustment for prepaid rent A is for how much?
1,600.
1,600.
What part of the where's the other A?
Prepaid rent on the credit side.
Yeah, once rent becomes used up, we don't call it prepaid rent anymore. What do we call it?
Rental
Rent.
expense.
Correct. And if anybody remembers our early adjusting entries, we did them. Each of these, by the way, these guys in this column are no strangers. We already said we used up 1 month of rent, prepaid rent. So it started off as how much? When we paid the rent in total, how much did we pay?
It was 32.
And after 1 month, we used up how much? 1,600. Therefore, the adjusting entry has to show what we used up, like everything else. So we debit rent expense and credit prepaid rent. Now, if somebody's still struggling with that adjusting entry, that's okay. Just go back and look at it again and go through it a couple of times. And then afterwards, man, how the hell I didn't get that the first time? But that's okay. It doesn't matter when you get it. What matters is that you get it. All right. Journal entry B, where's that? Is there a B?
Yes, there's office supplies for 1,540
Yes,
on the
my-
credit.
Yeah, and the debit?
Is 1,540 office supply expenses.
Indeed. Remember, adjustments are just to correct account balances and show what has been used up as an expense. That's all they are, these adjusting entries. Okay, so supplies started off with how much?
5,200.
Yes, how much was used up?
1,540.
1,540.
Absolutely. How do we find out what's used up in supplies in accounting?
Beginning balance from the current balance.
I mean, from the ending balance.
Beginning balance to the ending balance. You make the differences, what's been used.
Correct. How do we find out what the ending balance is for supplies?
Do an inventory.
I hope so. Don't make it up. But I tired of doing this inventory. I don't know, like guesstimate. Nothing.
I think they do that too.
I don't think they do it for sure, unfortunately. Okay? Folks always listen to shortcuts, even in accounting. Even though accounting suggests clearly no shortcuts, you still try to take shortcuts. Bloody thing. All right, any C?
Yes.
What adjusting entry is C?
It's accumulated depreciation office equipment
Okay,
on the credit side, and on the debit side is depreciation expense office equipment.
for which month?
Which month?
Yeah, which month did that expense occur? Which month do these adjustments refer to?
July.
July.
Absolutely. So if the adjustments refer to July, then the expenses were incurred in July.
Yeah.
Okay, folks? Yeah, just throwing it out so you can see the real world through all of this academic stuff. There is a real world component, by the way. It's not just purely academic. All right. So when I throw out certain questions, it's just to get you out of the box a little bit, wiggle around a little bit, show you that this stuff is actually has real world applications. Any D?
Yeah, D is
Wages
wages
expense.
expenses.
Yeah, we're not gonna talk about that one, right? Haven't we beaten that to death?
We have,
Okay? Accruing entries, reversing entries, of payment of, we've beaten that animal to death. Any E,
Yes, we have design revenue
okay?
on the credit side.
Okay,
And we have unearned design revenue on the debit side.
my. Does anybody understand that entry yet? That's an accrual as well. Sorry, a deferral. Accrual. Does anybody understand it? A
I don't get it.
a debit to unearned revenue and a credit to design revenue. Okay, so the credit to design revenue means what? $800.
The money wasn't received.
Wasn't received? Well, well,
I mean,
let-
it was received, but the job wasn't done as yet. Is that it?
well, let's put it this way. Whenever we see a credit to revenue, that means that we have earned it, correct?
Yes.
Whether we got the money or not is the other part of the entry. Once we see design revenue or any revenue earned, it means that we've earned it. But whether we got the money or not is another issue. So let's look at the debit. So we know that design revenue 800 means we've earned it. All right. So let's see what's happening on the debit side. We're debiting unearned design revenue. What does that mean?
Um, we haven't gotten. We haven't completed the job.
Well, if we hadn't completed the job, it would be a credit to unearned design revenue. That means that we have the money, but we haven't completed the job. But in this case, we have a debit to unearned revenue. What do you think that means?
we were paid for the job.
But the money is.
That we were paid for this job.
Okay.
Okay? And if you go back to that example in your text, you'll see that this is a case where we were paid for the job, where originally we hadn't been paid. So we made an adjusting entry for unearned revenue, saying because we got cash, we didn't get paid, and then we didn't do the work, and then when we do the work, we credit design revenue and we debit unearned design revenue. So for those of you who are still stuck on that, please go back and have a look at that entry just to make sure you are clear on that particular one. Because sometimes that particular one, is unearned revenue, gets people stuck. If when you look at that again, you're still stuck, let me know so we can attack it from potentially another angle that might help. Are we finished with the adjusting entries yet? The adjustments?
Now we are from F.
F. What is F?
F is also design revenue.
Well, what has happened in F? We have a credit and we have a debit. Debit is to what?
The accounts receivable,
And our credit is to?
design revenue.
Good. What does that adjusting entry mean?
We were paid for the,
We are waiting for monies to come in. Hopefully they come in.
yeah.
Yeah, whenever you have a debit to accounts receivable, that means you haven't been paid.
Yeah.
Okay? And accounts receivable is a stinky account until you get your money, correct?
Correct.
It is just there to remind you that people owe you. And if you don't put it there, you might forget who owe you. Maybe, not necessarily. But in accounting, we put it there to show you who owe you money. So anytime you do work and you have an accounts receivable, that means you've done the work, but you haven't been paid. I've done some work now and my receivable account haven't been paid, trying to get what? Payment. Because when it comes to payment, people don't like to pay. Even if they have the money, they just don't like it to leave their hands, even though they already did the service. They only like to pay doctors if they're dying and lawyers if they're going to prison. Sounds familiar. But for the rest of us, it's sometimes hell trying to get paid. I know them long time. Some people is mine. Everything is fine as long as you stay in line. Okay, do what we want. All right. So those adjustments. When some of you get a little bit older, you'll say, "Damn, I see why Mr. Wilkinson said those things. Interesting." Now I get it. Okay. So now that we've done any G's, any G adjustments?
No.
No. Now, folks, when you're looking at this worksheet, don't just look at it casually. Look at everything. See what's going on. Don't just glance over and say, "Yeah, I get that." Any fool knows what that is. Don't do that. Look at all the details, A, B, C, D, E, F. That's why I took the time to go through. In future, I wouldn't go through all that again, unless you ask me a specific question, because I just want you to make sure you go through everything. Don't take any shortcuts. You could, but like everything else in life, shortcuts have consequences. All right, now that we've done our adjustments, we can go over to the adjusted trial balance and carry over the correct balances based on those accounts that were adjusted and those accounts that didn't need adjustments. So we start with cash. Any adjustments necessary?
No.
So we carry over the same amount, right?
Yes.
Accounts receivable, any adjustment?
Yes.
Increase or decrease?
Increase to 5,000.
Good. Anytime you don't get it, just say, "I don't get that one." Office supplies, any adjustment?
Yes.
Increase or decrease?
It decreases.
Yeah, it decreases because we used up some, and it decreases because credits decrease debits, don't they?
Yes.
Okay, remember the rules, the rules, the rules. Okay, remember I told you the rules are very important. If you ignore them, you will be uncomfortable for a long time until you stop ignoring them. Okay, it's like kissing with your eyes open. Anybody kiss with their eyes open lately? No, we don't do that. For some reason, close our eye. It's like that. So if you open your eyes during kissing, that would be weird. Okay, follow the rules. All right. Just so you can remember. All right, anything for prepaid rent, any adjustment?
Yes, adjustment 1,600.
Increase or decrease?
Decrease.
Increase. Debit or credit?
Debit.
Why is it still a debit balance in the adjusted trial balance?
Because it was previous 3,200 and prepaid expense, prepaid asset
Yeah,
account.
we took off 16 of expenses, so we still have 16 prepaid, correct? I'll assume that's a yes.
Yes.
Office equipment, any adjustment?
No.
No. Accumulated depreciation, any adjustment?
Yes.
Increase or decrease?
Decrease.
It stays the same.
Increase.
It's the same, mate.
The
It's
normal
an
balance,
increase.
the normal balance for accumulated depreciation is a credit,
Credit balance.
period. Doesn't matter what. The normal balance for accumulated depreciation is a credit. What's the normal balance for depreciation expense?
The debit balance.
Debit changes.
It's
Okay.
credit.
All right. Accounts payable, any change?
No.
No change.
Unearned design revenue,
Yes.
what happened there? Did it increase or decrease?
By 800.
It decreased.
Credit, sorry.
Increased by 800. So what do you have left in unearned design revenue?
600.
What does it mean? What does the 600 mean?
That's how much revenue is collected.
Is it collected?
That's the balance of on the revenue account.
Well, this is not a revenue account. It says unearned design revenue.
Oh, sorry.
That's okay.
Unearned revenue.
Okay, so it has a balance of 600. What does that mean?
Okay, so they receive funds for services not yet rendered.
Yeah, they received $1,400 of your money. You've earned $800, but you still have $600 worth of services to do. You please bring the rest of my blinds. See, like that, right?
Okay.
Because I done paying my what?
Monies,
How much?
you owe me
Well, how much did you pay for the blinds?
1,400,
And how much of the blinds did you get so far?
800,
Do you expect now to get the rest of your blinds valued at?
600.
Okay. In case you guys think that this is just the company stuff, this is personal use too. All right. So that's unearned design revenue. Capital, any change?
No, remains the same.
Any change? Any change in withdrawals?
No,
No. Notice which accounts are debits and credits in the adjusted trial balance. If you put them in the wrong column, it will not balance. You follow?
yes.
Okay. Are we finished with the adjusted trial balance column in the worksheet?
No,
No. We still have the revenue and expenses to put in. Do you see them?
yes.
Yeah. And then at the bottom, we have wages payable as a credit. Where did that come from? Why is that there? Why is that an adjustment?
It's an expense, so
Or something.
Why does it say wages payable credit?
This is money that needs to be paid out.
Well, remember at the
Salary.
end of July, that is the entry that we made for the salary for the lady who worked those 3 days. Remember?
yeah,
That's
from the
thinking
previous month,
720.
from the previous month.
July 31st. So what entry did we make then? We debited what?
The wages expense account.
Yes, and we credited.
Wages payable.
Okay,
That's the same account. If you go to the adjustment columns, you see D, right?
yes,
The credit side. Where's the other D?
on the debit side,
On which
on
account?
the wages expenses.
Absolutely. Does everybody see that? Yeah. It is really not difficult once you get immersed in it. It's like when you hear Como se llama for the first time, you'd be like, what the hell is that? Then you hear Como se llama again, you say, Como se llama. What the hell is that? And then the more you
What
hear
day
it,
is it?
that's not what it is, but you're getting warm. But what the point I'm making is the more you say it, the more you immerse yourself in it, the easier it gets. Okay? So do not ignore any of the steps. Go through them. Don't be looking at your watch like the mall closing, so now you need to go. Then let's take your focus. All right? Nothing can get in the way like stuff to do other than studying. Because studying is boring, painful, and lonely. Because nobody can help you. And practicing stuff. Nobody can help you unless you ask a specific thing other than that you're on your own. So you always be always looking for a reason, man. But don't do it. Stick with it and you will not regret it. All right. Does the adjusting trial balance?
Yes, it does.
Yes. If it doesn't balance, you've done something wrong.
Hmm.
Go back and check your carrying over totals, check your debits and credits, check your amounts and so on. Okay. The next column is the income statement column, the simplest of all. You go to the revenue and expense side of the trial balance, of the adjusted trial balance, sorry, the adjusted trial balance, and you just carry over the revenue and carry over the expenses. Does everybody see that?
Yes.
Yeah, easy as sin.
Oh, yes.
Yeah, once you get to the adjusted trial balance, the rest is a breeze. All right, when you add the two up, you notice they don't balance, correct?
Correct.
The first balance doesn't balance. 9,6, you have 13,6. However, what we do in accounting, we take the difference, which is the net profit, and we add it to the side that has the lower balance, 3,960, so that the column balances. Does everybody see that?
Yes.
So that debit, that 3960 in the debit column is really net profit, which is credit. So we put it there so the worksheet balances.
Fun right back in the class on Zoom. Okay. At 12. All right.
See, that's the same thing. Somebody is now going to lose time from practicing this stuff because, man, 1201, we're off to the races.
Oh my thing.
I'm just teasing. Trust me, I'm just teasing you. I know we all have crap to do. Go and do them and then rush back. That's the thing. All right, and then the final column is the balance sheet column. So we go up to the top, and the only thing that goes in the balance sheet column are what, class? At this stage, you should be experts. The only thing goes in the balance sheet column are what?
Assets, liabilities, known as equity.
That's all. If you put anything else, that's not going to balance. It'll be wrong. Same thing as the income statement column. You put anything other than revenue expenses, it'll be wrong. So when I give you your homework for the worksheet, please follow the worksheet in your text. Don't make up anything. And if you're following your worksheet in your text line by line, you should be fine. And if you don't balance, then you have to go back because you made an error. Don't panic right away. Just go back and start again from the first one. Don't say, let me have a look at this, see if my own mind will help me. Don't do that. Okay. So when we put in the elements of the balance sheet from the top, from the adjusted trial balance, where does the 2800 go? Debit or credit?
Debit,
Debit. Why?
because it decreases the capital.
That's one reason. Yes. What's the other reason? That's a good reason. Excellent. What's the other reason? What does it increase? Which account does the 2800 increase?
Cash.
Not cash. Remember? Because when you withdraw, you're taking money out.
The owner's withdrawal account.
Owner's withdrawal account. Okay, everybody? Does everybody see that? I'm assuming
sir.
yes. Okay. So again, when we added the debit and credit columns on the balance sheet worksheet, they don't balance. The difference is what? What do we
3,960.
what do we call that? What do we
That's
know?
the net income.
Correct. So in order for the balance sheet column to balance, we put it on the credit side. And when we're doing the net income, in order for it to balance, we put it on the debit side.
Debit side.
We know that's only for our worksheet purposes. We know what that 3960 means, correct? We know that's net profit, don't we?
Yes.
Yes, absolutely. All right, so there you go. That's your worksheet. It is not complicated. If you notice on my screen, we show you again 13,600 minus 9,640 equals net income. Just to remind you of something that should be a dead horse by now. Okay? We should all know that. Of course, all the adjusting entries that we make, they must all have been recorded in the journal entry. So therefore, the A, B, C, D, E, whatever number of adjusting entries there, I think there were A to G to F. We put them in our journal just like this. And don't reinvent the wheel. If you have to journalize your adjusting entries, just go to that page in your book and say, follow the same format, only the numbers might change given your transaction, but the format is the same all the way through. Just make sure you debit the correct thing and credit the correct thing. Put in your narrative, the date, and everything that's supposed to go there. No magic whatsoever. Tedious a little bit? Yes. Time consuming a little bit? Yes. Frustrating a little bit? Hell yes. But no pain? Anybody knows that expression?
No gain.
No gain. Sorry. So if you want a bouncing little baby boy or girl, there must be a little bit of pain and suffering first. You want to be a great bookkeeper, accountant, understanding some of these concepts, there must be a little pain first. So don't worry about pain. When you feel it coming, just grit your teeth, keep going. Take a nap, go back to it. Go for a walk, whatever you need to do, but definitely go through the pain. All right. The only other thing I want to mention today is in the next chapter. That's why I'm scrolling. We're not going to do the whole chapter today. There's just one aspect of it that I want to talk about under financial reporting and analysis, because I want you to get a little bit of that in, because you should already be familiar with it. And that has to do, by the way, you see this note here that says, what are the objectives of financial reporting? Don't just skim over it. Just look at it. There are two objectives. One, to assess cash flow, and two, to assess stewardship. Cash flow has to do with the cash flow statement and income statement. Stewardship has to do with how we maintain the balance sheet. You don't need to know all the details. Just need to know that those are two of the key objectives in accounting. Okay. And then we're going to get into some of the qualitative and quantitative aspects of accounting next week. But what I really want you to see, there's the point on ethical financial reporting. Does everybody see that on my screen? I don't know if it's in your text.
Yes,
Good.
and it's in our text on page 174.
Thank you very much. Page 170 for everyone. Ethical financial reporting, as we noted earlier in the text, in 2002, in the wake of accounting scandals at Enron and WorldCom, Congress passed the Sarbanes-Oxley Act. One of the important outcomes of this legislation was that the Securities and Exchange Commission of the United States instituted rules requiring the chief executive officers and the chief financial officers, who are usually the culprits of any major scandal anyway. Not only them, but they tend to lead the pack all too often. The bloody top of all publicly traded companies to certify that, to their knowledge, the quarterly and annual statements that their companies file with the SEC are accurate and complete. And that is designed so that they can't say later on they did not know when some scandalous nonsense come up that costs the companies millions and billions of bloody dollars. And usually when there's a scandal, somebody gets rich, or some group of people, just not the regular folks down the line like us, the regular hardworking people to work 9 o'clock or else work forever and like that. We're not the ones who get rich. The people at the top. Sorry, I just said that so you can remember. Ethical financial reporting. Always remember that your reporting should be in order. All right. Okay. Am I getting to what I want to get to? Yes, I am. I don't know if you've gotten this far in your reading. If you did, that's a huge achievement. But if you look at Exhibit 5.1, we see an example of what we call a classified balance sheet. And I came to this because a classified balance sheet is the same balance sheet you've always seen before. The only difference is, if you notice, we have it broken down into classifications. The assets are broken down into 4 categories. Do you see that? What are the 4 categories for the assets? How are they classified?
Current assets, investment, property, plant, equipment, and tangible assets.
Absolutely. That's all classifications are. And so your job, when you're classifying a balance sheet, for example, is to just look at the information and see what falls under current assets, and you have examples, investments, any investment that the company makes, and you'll be told that in any question you get. What is property, plant, and equipment? As you can see what they are, land and buildings and equipment. And intangible assets are those you cannot touch, like trademarks and designs. All right? And you'll be told in any question what they are. You just need to know where to put them. And you add them up. Don't reinvent the wheel. Follow the example in your text. Any classification for liabilities?
Yes.
What are they?
Current liabilities and long-term liabilities.
Current and long-term. Current are those that occur within 1 year. Long-term is any liability that goes beyond 1 year. I think we had that discussion as well. Any classification for owner's equity?
Not really just the capital.
Excellent. No classification required for owner's equity. Way to go. That's a great observation. So all of a sudden, the classified balance sheet has been demystified. It is no longer a mystery. All right. And please, all the information underneath concerning these classifications, you have to read them. Don't be like, I get it from the discussion in my class today. I'm not reading all that bloody stuff. Well, I wouldn't be there to watch you read it, but I encourage you to read it. Okay. On the same note of classification, if you look at my screen, I'm sure this should be in your text in terms of the form of business. Remember we said that in accounting and in business, there are 3 forms of business that we recognize. What are they?
Sole proprietorship, partnership, and corporation.
All right. It's a nice test question, nice short answer question. What are the 3 types of business organization? And then somebody say, you know what, I should have studied that one. That would have been 3 or 4 or 5 easy points, just like that. All right. Now, in each of these types of business, the owner's equity is classified separately. That's really the point we want to make here. For the sole proprietorship, there's only one classification, correct? Correct?
Correct.
Correct.
Yeah. Yeah.
Okay. For the partnership, is there one classification?
It's 2.
2 or more, depending on how many partners, correct?
Correct.
Remember the definition for partnership? 2 or more persons. So if this partnership has 50 persons, there'll be 50 capital accounts. Do you follow?
Yes, sir.
And all 50 will have to show up on the balance sheet, under equity, partners equity. You can't say add up all and put it under partners equity total. No way. Not on the partners equity account. If there are 50 partners, you have to show all 50 on that account under owner's equity for the partnership. Somebody get that?
Yes.
How many partners in this company?
2
What are their names?
are
All right.
Jay Bonanelli.
Okay. Yeah, some funny name, yes? What is the balance of the first partner's account?
168,750.
And the second partner?
224,982.
So the total partner's equity equals?
393732.
Okay, folks. So don't get caught in an exam or your homework or whatever with this simple thing. I say simple now because you've been exposed to it. It wasn't simple 5 minutes ago. Nothing is simple until you're exposed to it. That's the whole point. Not even 1 plus bloody 1. So when people say to you next time, you didn't know that, just tell them no. Did you always know? Because people like to ask you stuff like, you didn't know that? Like they always knew everything they know. If you don't know, you don't know.
Yeah.
Correct?
Yes.
You don't feel put off if you don't get stuff right away. The hell with it until you know. If somebody didn't teach us 1+1, when somebody says 1+1, nothing, because we don't bloody know. No matter how simple it is. All right? What's the third type of business?
Corporation.
Corporation. Anybody knows what a corporation is?
A corporation is owned by stakeholders.
And what do we call them? What do we normally call those stakeholders? They have a name because there are other stakeholders like government and investors too. What do we call the stakeholders in a corporation?
Shareholders.
Yes, shareholders or stockholders. Do you see that? Everybody looking at this equity
Yeah.
section?
Yeah.
This is the equity section of a company. The first two was the equity section of a sole proprietorship and a partnership. But if it's a corporation or company, the equity section should look like the one we're looking at. Are we all looking at that?
Yes.
The name of this equity section of the balance sheet for the company is either shareholders' equity or stockholders' equity. Okay? So if you buy shares in Cable Bahamas, you're now a shareholder, or you're a stakeholder, which is called by name, and that name is shareholder. Okay? Anybody in this group own shares anywhere?
Yes, sir.
Great. If you own shares somewhere, then you're part owner, whatever the heck that is. So even if you only one share, next shareholders meeting, go there and make noise with your cowbells and demand answers to stuff. And when they look, they say this person only has one share. That's okay. He's still a part owner of the company, even though you only own one share. Once you own one or more, and you could start making noise. All right. It's just like children who people still call illegitimate children. Like when it's time for the will to be read, they said nothing for illegitimate children. Is that still legal in the Bahamas? Don't give nothing.
No.
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 In case you guys didn't know, if you have well, I don't like the word illegitimate because children are not illegitimate. It's really illegitimate parents. Okay, children don't know what the hell's going on. They just show up from mama, dada somewhere. So that in my book, there's no such thing as illegitimate children, and anybody found saying that should be fined. Now, if you wish to refer to their parents as illegitimate, perfect in their behavior, so to speak. All right. So in the Bahamas, if children are illegitimate or born out of wedlock, now before they were not entitled to anything from the father or the parents, primarily the father, but parents, because you could have those stuff going on otherwise as well with our girls these days. Women have moved up and acting like guys now, so doing all the same things all that stuff. But now that doesn't apply. Okay, all the children who can prove that they are children of the person who died are entitled, no matter who feels what. And they should be entitled because children are not responsible for getting here. Doesn't matter who made a mistake with whom. Okay, that's just information. Does it have any accounting implications? Everything has accounting implications because it's called being accountable, which is what everything we're talking about, being accountable. All right. So the shareholders equity side of the balance sheet for the company is, as you can see, a little more complicated than the other two, but not impossible to understand. It has two sections. First of all, there has a section called contributed capital and a section called retained earnings. We know what retained earnings are. They are the profits of the company that we leave in the business year after year, or what is left in the business after dividends are paid, if any are paid. That's retained earnings. Now, contributed capital has two parts. First of all, it represents the investment that is made in the company by shareholders, like our person who has shares. So if we look at this example, the contributed capital is made up of common stock or shares. The value of the stock is $10, and the amount of shares that have been issued and outstanding is $20,000. So how did we get $200,000 for the value of these common shares? Anyone?
That's $10 per share.
Okay?
You authorize 20,000 shares, so it'd be $10 times the 20,000,
Equals?
200,000.
Thank you very much. You don't have to believe the text. Sometimes they make typos. Do it yourself. But you're doing it yourself for your own practice. So in future, if you need to calculate your shareholdings for yourself personally, you can say, wait a minute, what's the value of these shares? And somebody says, I know, asking, how come you don't know? We're in the shareholders meeting, what's the value? I need to know. So now with a little information, you could be a little more involved, not to mention informed. All right, so the dollar value of these 20,000 shares outstanding in the public is $200,000. Then we have the other account under contributed capital, which is called additional paid in capital. We'll see that later on when you do accounting too. I won't confuse you with that now. For the moment, it equals $40,000. All right. If I give you a question in the test, I will not ask you to try to explain additional paid in capital. You will be given that additional paid in capital is X amount. All I want you to be able to do at this point is put it in the correct section of the shareholders equity section of the balance sheet for a company. Somebody get that?
Yes.
Okay. So what is the total stockholders or shareholders equity for this company?
393,732.
Exactly. So where did that 635,664 come from?
Where did the
Nobody's curious about that 635. I'm the only curious one.
It says it's the total liabilities and stockholders' equity.
And where did that come from?
Is that the capital plus the stockholders' equity together?
Good start. I'm glad you got it that way. Not quite, but you're getting things warm in terms of where did that come from. It is the stockholders' equity plus what?
Oh, that portion didn't show. You're looking at I was looking in the book. I didn't see that.
Once we understand the accounting equation, it doesn't have to show because we know, well, first of all, what is the accounting equation, anyone?
Assets equals liabilities plus capital.
Correct. Which means that on the right-hand side of the equation, we have two elements. What are they?
That'll be the liabilities and capital.
Correct. And so if we know what the stockholders equity section is, and we know what the total liabilities and stockholders equity section is, can we not calculate the liability for this entity?
Yes.
Yes.
Which is?
Yeah. Mhm.
Which is? What's the liability total? The liability total?
Would that be 241,932?
What did you do?
I minus the total liabilities and stockholders' equity from the stockholders' equity.
You took the larger amount from the smaller amount?
Correct. So I took the 393.72 from the 635,664.
Okay, that is technically correct. Just a word of caution. Always take the larger amount and subtract the smaller amount from it, no matter what you're doing.
Okay.
Yeah, okay. That's a good mathematical practice. So yes, you are absolutely correct. The 291, is it?
241,932.
Except, yeah, that would be the liability for this particular entity. So you can see, once you understand the equation, you can start working things out. All right. I just kind of went through that exercise to get you to think about these things a little bit. Because usually when you're new to this stuff, you don't really get into all that thinking stuff. You're like, what did I sign up for to begin with? All right. And it's okay if you don't get it all in one rush. That's not the way it works. We just introduce you and eventually it all comes together. Any question about those three different kinds of equities for the balance sheet? All right. So if you get a question on a balance sheet, your owner's equity section will look different depending on what kind of business it is. That's the point. If it's a sole proprietorship, it should look like the first one. If it's a partnership, it should look like the second one. And if your balance sheet relates to a company, the equity section should look like the third one. Where do I get the information? It will be there. Trust me. Remember, in accounting, we don't guess. If you have to figure out where it came from, don't do anything until you get the information. See my point? Don't make up anything. Don't force anything to balance. Don't plug anything. Anybody knows what plug is in accounting? Plug.
Yeah, just put in a number and to make it balance.
How did you know that was plug?
I worked with it before.
Thank you for being so dreadfully honest. It's very important that your colleagues understand what plugging is if they didn't know. And theoretically and period, don't plug. Anytime you plug something, if you're a big boss, tell you plug it and they sign off with their signature. Follow? And even then, you might question it depending how serious it is. Other than that, don't plug anything. And if you have to plug, quote unquote, God forbid, dog on it, let your big boss sign off. Don't you sign it either. They sign. Because as an accountant, you plug. Everybody get that? Hello?
Yes.
Okay. In accounting, you can't find it, you don't plug. You write it off. You don't plug. You put in a temporary account until you find it. And if you don't find it, you don't plug. You write it off. If you do find it, then you transfer it to the correct account from the temporary account. Okie dokie. All right. So we're going to stop there today. For those of you who have not read chapter 4, you now have chapters 4 and 5 to read. When we come back next week, we'll finish some conceptual issues in chapter 4. They're not difficult, which you should be familiar with by that time. Qualitative and quantitative measures can only take a few moments, especially that you would have read it already. And then we'll get right into chapter 5 and finish up those ratio discussions in chapter 5 and maybe a little discussion on something in chapter 6, and then we'll be done. But certainly for next week's class, you should have read up to the end of chapter 5 so that you're not spending too much of your time reading stuff, but more time come the next week and a half or so studying and making notes and practicing. All right? Homework. If you start feeling stressed by homework, it's okay. You're supposed to feel a little bit stressed. It's designed to create a little bit of stress because in all that stress, you're learning stuff that just reading will never, ever teach you. Ever. All right? So let's go. Pen and paper. Are we ready?
Yes.
Homework piece number 1, page 158. Question P2. Question P2. Next question, page 159. Question P4. Question P4. And finally, the easiest question of all, page 198. Question P2. Please only do question 1 of P2. Please only do question 1 of P2 in that question. Okay? And as usual, you know what to do if you get stuck. And as usual, don't wait until the last minute. And as usual, if you can get it done this weekend, not only will it assist with your preparation for submitting them, but also it will greatly assist you in your review and study for your examination. Guaranteed. Okay? If all of this pain and suffering with these questions does not help somebody, you did not immerse yourself in it. But if you did immerse yourself and go through all the ropes and feel really like this is a mess, then you will be the great beneficiary come examination. Guaranteed. All right? Any questions? All right, wonderful. In that case, good luck with all that crazy stuff. You all have my condolences for all these things you need to do, but that's okay. Go for it. Give it your best shot. Please be safe this week, and I shall see you on Saturday, same time, in one piece. All right?
All right, be safe.
Wonderful. You guys take care.
Okay, goodbye.
Bye.
Bye.
Pleasant weekend. Pleasant weekend. Stay.
Great weekend.